Kaze bashyitsi beza muri uru Rwanda rwacu no muri iki kiganiro cy'ingenzi. Soyez les bienvenus mesdames et messieurs dans cette conférence. Welcome everyone, welcome to our distinguished delegates to this conference hosted by the International Center for Tax and Development in partnership with the Rwanda Revenue Authority. I am Ukwezi Ingabire Umuhire Grace, and I will be entertaining you a little bit for today. I hope you have fun, and I hope that you actually enjoyed the dance troupe that we organized for you. We are going to go ahead so that we don't waste time, but just to give you some room keeping, I think that's what they call it. Not that there's going to be photography throughout the conference, and it's going to be live streamed, so please keep this in mind throughout the conference. And if you do not wish to be part of the photos, just inform us so that we don't include you, okay, or that we don't have to inconvenience anyone. All right. Other than that, I welcome you. We are going to have our welcoming and opening remarks. They are going to be given by the RRA's Commissioner General, Nuenshuti Ronald, and he's going to be welcoming us. Thank you.
Good morning. It's good to see that normally we are used to having the cultural dance coming last in the evening when people can dance. But today I think there was some change of entertainment and it came in the morning. I expected people to be dancing early in the morning. So representatives from our private and public sector that are here today, government institutions fully represented here, distinguished development partners and stakeholders, some of them I see them here, Dr. Julia Maskany, I think I tried to pronounce that correct, Executive Director for ICTD here. Ladies and gentlemen, once again, good morning. It is my great privilege and honor to welcome you to this landmark conference themed towards a digital tax administration, lessons learned and directions for reform. On behalf of Rwanda Revenue Authority, I extend my sincere gratitude to the International Center for Tax and Development for their invaluable partnership in organizing this event, but also for the last 10 years working with us. As we gather here today, we do so fresh from the just concluded ATAF annual meeting, and the theme of our meeting last week was ATAF annual meeting, which was preparing for the future revenue administration in a dynamic global landscape. That theme compelled us to think critically about how we as tax administrators can adapt to an ever-changing global environment. It also challenged us to envision transformative solution to prepare for the future effectively. Building on these reflections, today, our conference provides an ideal platform to delve deeper into one of the most critical elements shaping that future: digital transformation in tax administration. As the global landscape evolves, so must our systems, strategies, policies, and also ensuring that they remain inclusive, efficient, and resilient. Digital transformation is the cornerstone of a modern tax administration. It is not merely about technology. It's about creating systems that foster inclusivity, efficiency, and transparency. This conference offers an excellent platform to reflect on global progress, exchange lessons learned, and chart a forward-looking agenda for reforms. Rwanda has been and will always be a pioneer in leveraging on technology to modernize the tax administration. Key milestones include some of the studies that we have done and some of the IT systems that we have put in place to support us in executing our mandate. Some of the reforms that we have done in the area of technology, these include introduction of iSCUDA in 2024, and in 2025, we moved to a SCUDA world. In 2012, we moved to a SCUDA world. Also, this has saved us over $6.8 million in clearance time under the customs. This is the reference is the trademark East Africa study that was done. And in 2011, we launched the e-tax system, revolutionizing the tax filing and payments by reducing errors and administrative burdens. For those who remember the era before, where we used to have long lines of people coming to file. Today, at least we have done away with that, and also it has reduced the cost of compliance for our taxpayers. In 2013, we introduced the electronic billing machines, enhancing VAT compliance and curbing evasion. In 2017, it was upgraded to EBM version 2, offering real-time data capture and enhanced fraud prevention. The impact of these reforms is evident. Number one, because in between 2017 and 2022, VAT collections increased by 61%, and income tax collection surged to 95%. In 2021, income tax overtook payers' yuan as the second largest revenue contributor, driven by EBM for All policy initiated in 2020. Number two, collaborative research with our partners highlights the transformative outcomes. And some of them include RRA and IGC in 2014 conducted a study and established that VAT increased by 5.4% in tax to GDP ratio. A study done by ICTD, also on EBM version 2, adoption, concluded that this led to a 12% increase in VAT due among new users. A study also done by RRA and Tax Administration Research Center concluded that EBM supported audits achieved at least $33,400 per firm compared to non-users. And fourth, another study that we conducted with DIM in 2021 concluded that EBM for All policy increased income tax purchase validation by 10 percentage points, with more taxpayers, EBM users, tripling in 2022. These advancements reflect Rwanda's progress toward self-reliance. Domestic revenue now funds over 54% of our national budget. This aligns with the national strategies such as Vision 2020, Vision 2050, and the National Strategy for Transformation. This conference addresses critical themes such as data management, digital inclusion, and public infrastructure, which form the foundation of a robust tax ecosystem. Sessions on taxpayer registration and digital payment system are particularly significant for expanding the tax base. Collaboration, as demonstrated through the integration of the national ID systems and inter-institutional data exchange, this remains key to achieving our goals. On behalf of RRA, I reaffirm our commitment to innovation, learning, and practical reforms. Our experience shows that digital tools are not only enablers, but catalysts for trust building, improved service delivery, and sustainable revenue growth. In closing, thank you all for your invaluable contributions, your insights and expertise, which will shape actionable reforms and inspire innovation in most of our African tax administrations. Let's make this conference a springboard for meaningful collaboration and progress. On a lighter note, while you are here, I invite you to explore Kigali's vibrant charm and, if possible, take time to discover Rwanda's wonders. From the breathtaking gorillas in the north to the tranquil beauty of Lake Kivu, let your time here be both productive and unforgettable. I thank you and wish you all insightful deliberation. Thank you.
Thank you, Commissioner General. We are now going to hear from Dr. Julia Muscagni, who is the Executive Director of the ICTD.
Good morning. Commissioner General, our MC, Kwesi Ngabire Grace, representative from the Ministry of ICT and Innovation, Mr. Antoine Sebera. Ladies and gentlemen, good morning and welcome to this conference on digitization in tax administration. It is a great honor for me and for the whole ICTD team to co-host this conference with the Rwanda Revenue Authority. And it is a particular honor to host it in Rwanda. Not only because, as CG said, Rwanda is leading the way in digital transformation in government and tax administration. He gave you many examples of the developments here. But also because we are currently celebrating 10 years of the collaboration between the ICTD and the RRA. And the first project we did together exactly 10 years ago has got a lot to do with the theme of this conference. It was the first time that a revenue authority on the African continent decided to share their data, anonymized and digitized, for the purpose of conducting rigorous research, policy analysis, and evaluation. That research allowed the Rwanda Revenue Authority to improve their revenue collection and improve their tax administration as a service to taxpayers. Importantly, that was done with Rwandan data and with research that was deeply embedded in the Rwandan context. That kind of research and most of the evidence that you will see at this conference wouldn't have been possible without digitized data. Just 10 years ago, it would have been entirely inconceivable to have a whole conference packed with evidence based on digitized administrative data from African countries. So as we start with this conference, I want to acknowledge the great progress that has already happened over the past 10 years on digitization, on tax administration, on technology adoption, and on collaboration with external researchers. I gave you the example of the collaboration between the ICTD and the RRA, but there's many other examples, and I'm not going to try to mention all of them, but you're all sitting here in this room, many countries who have experimented with new technologies as they came up, many countries who have produced excellent research from within the tax administration, and in collaboration with several research organizations, not only the ICTD, but several others who are represented here. For us at the ICTD, this conference represents a bit of a turning point. About 4 years ago, we started working more intensively on digitization in tax administration, thanks to a grant from the Bill and Melinda Gates Foundation that pushed us to look into the emerging trend of taxing mobile money and digital financial services, and also the implications of data and technology for tax administration. We had already engaged in this topic, but that grant gave us an opportunity to expand that work and also build bridges across two different fields: digital financial services and financial inclusion on the one hand, and tax administration on the other hand. There were several challenges. We learned a lot in the process, but I'm really proud to see the body of research that was produced under that program, much of which will be the cornerstone of this conference. I would also like to encourage you to visit the posters at the back of the room. There's the dedicated session where you will have a chance to actually speak with the authors of each one of them. So please take that opportunity. I said it's a turning point because as we concluded that first phase of the DigiTax program, we just launched the second phase. And this time we're looking at digital public infrastructure, DPI, and tax administration. And once again, we're looking to do some bridge building. And that's exactly what we're doing in the conference today. We have brought some tax experts and some DPI experts. And I know that tax experts like myself, I certainly sometimes feel out of my depth when I'm speaking about DPI, and I'm sure that is the case for some other tax experts here in the room. And perhaps those of you who are DPI experts might have done a little bit of catching up on the latest developments in tax administration in Africa as you were preparing for this conference. So here is my wish for this conference. As we build bridges across DPI and tax, I do hope we will all embrace being slightly out of our comfort zones, and we will take this as an opportunity to learn from each other and lay the foundation for the next decade of progress and research on digitization in tax administration and in government more generally. I certainly look forward to that, and I would like to thank you all for taking the time to contribute to the discussions at this conference. Thank you.
Thank you, Dr. Maskakni. We are going to be hearing now from Mr. Innocent Bagamba Muhizi, who is the CEO of RISA, and he's here as a representative of the Ministry of ICT of Rwanda. Welcome, sir.
Good morning, everyone. My name is not Innocent Bagamba. I'm representing him. I should resist the temptation to even take his own name. So, Commissioner General from the Revenue Authority, the Executive Director for the International Center for Tax and Development, distinguished ladies and gentlemen, a very good morning once again. And I would like to thank you for the opportunity to address this distinguished audience on this occasion of the Conference on Digital Tax Administration. It's indeed a great privilege to discuss this important topic that is both timely and critical to the advancement of our economies. Over the last decades, or even slightly more, our continent has witnessed extraordinary transformation driven by the rapid growth of digital economy. From mobile banking innovations, emergence of e-commerce platforms, digital marketplace, and drone usage, the continent is increasingly leveraging technologies to bridge economic gaps and foster inclusion. Startups, tech hubs across Africa are thriving, and digital entrepreneurship has become a key driver of economic growth, creating jobs, expanding access to goods and services. In parallel with the growth of the digital economy, many African governments have embarked on the journey of digital transformation for several years now. We are increasingly talking about digital public infrastructure, and we're very glad that this is going to be extensively covered in this conference. Digital initiatives such as e-government platform, online tax filing, and digital identification programs are transforming how public services are delivered. These initiatives not only enhance efficiency and transparency, but also improve accessibility for citizens and business alike. Several countries have made significant strides in implementing digital government services, streamlining bureaucratic processes, and fostering trust in public administration. These advancements serve as a foundation of modern tax systems, enabling better data collection, integration, and analysis. In Rwanda, in particular, all essential government services are available online. We target to achieve universal access to e-government by the year 2029, which is a key pillar of our national strategy for transformation. Nevertheless, the path to fully digital government is not without challenges. The need for robust infrastructure, digital literacy, data protection frameworks remain pressing. Ensuring the inclusivity of digital service is equally critical, as we must strive to leave no one behind in our digital transformation journeys. While the opportunities are immense, the journey toward robust digital tax administration is not without its challenges as well. First, there is an issue of data availability and data quality. Many organizations today still struggle, government also, with fragmented and incomplete data, making it difficult to track and access digital transactions accurately. Ensuring data interoperability and establishing secure data sharing mechanisms are critical steps that must be prioritized. Secondly, technological limitation poses significant constraints. Some administrations still lack infrastructure and technical expertise needed to deploy advanced tools for monitoring, analyzing, and enforcing tax compliance in the context of the digital economy. Thus, building capacity in data analytics, artificial intelligence, and cybersecurity is essential in overcoming these obstacles. Particularly, AI has a very big potential to revolutionize digital tax administration and governance in low-income countries. AI can significantly improve the efficiency and effectiveness of tax systems. For example, AI-driven tools can help identify patterns of tax evasion, optimize resource allocation, and provide real-time support to the taxpayers. The adoption of AI, however, presents unique challenges in the context of low-income countries. The lack of skilled personnel, technical expertise in AI development, and other challenges such as infrastructure that needs to be developed for fully harnessing the benefits of AI. Securing partnerships with international organizations and private sector can help bridge the gap. Ethical and regulatory concerns should not be overlooked, such as data privacy, algorithmic bias, accountability. Developing countries must establish robust legal framework and ethical guidelines to govern the use of AI in public administration. Finally, infrastructure challenges, including reliable internet access, electricity, high computing servers, and data centers must also be in place. It's important to also align the tax framework with the rapidly evolving business models as we can see across the globe. Digital transactions are transcending traditional boundaries, geographical one especially, requiring international cooperation and harmonization to avoid issues like double taxation or tax evasion. In the remainder of this conference, we look forward to explore innovative solutions, share best practices, and discuss strategies to address these challenges effectively. Together, we have the opportunity to reimagine tax administration in a way that harnesses the power of digital technologies while fostering fairness and inclusivity. I'd like to end by thanking you for your kind attention and look forward to the insightful discussions ahead. Thank you very much.
Thank you, sir. And apologies on the mix-up with the names. We were expecting someone different. But it's good that you were here to represent him at the same time because the knowledge is paramount, not really so much the personality. As you have heard from our first three speakers from the opening remarks, movement towards digital transformation is quite a long road, and since the world has now become a global village, it's going to have to be a human effort. We all have to pull our heads together and do it together, and I believe we can actually reach to the goals that we need to reach. We are now going to be hearing from Martin Heersen, the Research Director of ICTD. He's going to give us an overview of the conference and a bit of an introduction. Welcome.
Thanks very much. It's a pleasure to be here. I've been saying to some people, Rwanda was the first country I ever visited in Africa 23 years ago. It's always special to be back here and see how much has changed in those 23 years. So I'm going to talk to you briefly about how ICTD is approaching the work we're going to be doing over the next few years on digital public infrastructure. And if you're new to the term, you're going to hear DPI a lot. So just to be clear, that's what it stands for. So we used to think of tax administration as primarily a use case for DPI. So we know that tax administrations are often more progressed in the way in which they've developed digital technology and use of data than many other public institutions. And so there are lots of lessons to be taken from the experiences of tax administrations for other parts of government. But now we think differently because we recognize that tax systems have a role to play in the broader digitalization of the public realm. Tax administrations can be used as a gateway into digital ID systems, an incentive for the adoption of digital merchant payments, and a catalyst for public sector digitalization. So that's an extra responsibility for us as practitioners and researchers in the tax field. So we're very pleased in that context to be beginning this new program of work supported by the Gates Foundation. And it's going to be built on three research questions. So the first is, how can we strengthen the impact of DPI on tax administration? The second is, in particular, how can we strengthen data exchange, which is the aspect of DPI that has been least studied in the tax context. And the third question is, how can we ensure that DPI and tax administration is inclusive and does not reinforce axes of exclusion that we find in tax systems and in access to digital services? So you'll see those questions under the surface of what we've planned for the conference. So today we're going to consider some of the foundational matters that are important in digitalization of tax administration: data management, data governance, digital inclusion. And as Julia mentioned, we're also going to have a chance to look at the posters that you'll see at the back of the room. Tomorrow we're going to focus on the three pillars of DPI that we've taken from all of the work we see across different areas of digital public infrastructure and how they apply to taxation. So that's digital IDs, digital payments, and data sharing. So I just want to finish these short remarks by saying that ICTD conferences are perhaps a bit different to some other conferences. This isn't an academic conference, it's not a policy conference, and it's not a practitioner technical conference. It's all of those things. What does that mean? It means that evidence matters, and we should interrogate whether the evidence we find supports the conclusions that we're drawing. But it also means that evidence, that the important thing is how we turn that evidence into action and we should think about how we can ensure that policymakers, people building digital public infrastructure systems, people supporting that work, can learn from and draw from the conclusions of our evidence. I also want to say we're here representing 5 continents. There are people from 5 continents here. And on the academic side, we represent many disciplines. Julia's an economist. I'm a political scientist. You're also going to hear from tax law scholars, from information systems scholars, and I believe from a historian as well. So with that, I'd like to say we're going to be really hoping that as part of this conference, we can enrich our research agenda as it goes forward over the next 3 years. We're going to be drawing on the ideas that we hear at the conference. But if you also have ideas for research you think the ICTD should be doing, this is really the right time to be telling us on this topic, because we are at the point of putting together our research agenda. So please feel free to say that in the room or to grab one of us and to tell us, because we've gathered you all together and you're a great resource for us as we go forward. So with that, thank you very much, and I look forward to the first session.
Thank you, Martin. We're just about to be starting with the gist of the conference, but in the meantime, if I may, please ask the first 3 speakers to head down to the press conference. We have ushers at the back who will be showing you exactly where the press conference is going to be held. And then in the meantime, the rest of the room, we are going to be carrying on with data management to support core administrative functions. We are going to be having 4 panelists, 1 moderator, and we will start with the scene setter. If I can just give you a summary of what it's going to entail. This panel will consist of a policy-oriented discussion on the potential of administrative tax data to strengthen tax administration's core functions and improve tax performance, with a focus on current practices and challenges in managing, sharing, using, and analyzing administrative data. The perspectives of both tax administrations and researchers using tax data will be presented and discussed. Our scene setter is going to be Dr. Giovanni Occhiali, a research fellow from the ICTD, International Center for Tax and Development. And then we will have our panelists, if they can just come forward as a call on them. It will be Ronald Waiswa, specialist, applied research and statistics from the African Tax Administration Forum, that's ATAF. It will be Dennis Mokama, our current interim commissioner for strategy and risk analysis from Rwanda Revenue Authority. And Rose Camille Vincent, assistant professor from the University of Utrecht. Our panelists will take a seat here in the front, and our moderator then will be Tengetile Pindile Masuku, manager research from Eswatini Revenue Services. Dr. Giovanni.
Good morning, ladies and gentlemen. Again, thank you very much for the wonderful hospitality we have received by the Rwanda Revenue Authority and the Rwanda country in general since we are here. We've been here. I have a very tough act because I have to follow 3 great opening speeches from the CG, the Ministry of ICT, and Julia Martin. I'm also very lucky though, because they preempted a lot of the things that I will be discussing over the next few slides, doing a great job on that. And also I have to convince a room full of tax administrators that data is a very important thing, which shouldn't be too tough of a things to do. So without further ado, we know that there has been a great number of progresses that I'll stay away from the mic, that have been made in the continent over the last 20 years in terms of electricity, energy, and internet access. In 2008, just 5% of the African population had access to the internet. That figures increased to 25% by 2018 and is now at 36% in 2022. So the pace of this improvement is not slowing down in any way. And to this increased availability of internet, there has been a matching increase of use of IT technologies by many government institutions. As we have heard, revenue authorities are often spearheading this type of change. And by now, many of the core functions of revenue administration have been automated. Registration happens online. Various types of compliance support are available on website or through apps. A lot of the data that is gathered that way is used for risk management or for dispute resolution. With this switch away from manual practices, there has been a great increase in the availability of data. A lot of what was previously collected on paper is now stored on laptop and servers, and this has led to a great increase in the capacity of using all of this information for a variety of different things. However, the process of collecting data is not the same as the process of ensuring that the data collected is of good quality. And data of bad quality is not particularly useful for any of the many things that revenue authorities aims to do any given day. So what we'll be discussing now is very quickly what is the role of this potentially good data for many of the things, and then going over what are the challenges. From a point of view of registration, getting into the taxpayer registry was always a very burdensome thing to do for many taxpayers. Now is extremely easy. They just have to log in on a portal online. They can provide a few information, and they will acquire a taxpayer identification number right away. That simplifies greatly the job of those who have to keep track of the size and the characteristic of their taxpayer base. I remember a few years ago when I was working in various countries, it was still quite common to have a variety of parallel registries existing on Excel spreadsheet. Every unit will keep its own. There were duplication of taxpayer identification numbers. A lot of information was missing. The same things is happening with regard to properties. It is now extremely easy to identify property using geographical information system, maps available online, and then to just simply go to the field and verify whether these properties are actually owned by whom, and attach georeference coding to all of these. Filing online, paying online, reducing the interactions between taxpayers and tax officials have both made compliance easier, quicker, and reduce the opportunities for rent seeking from both taxpayers and tax officials. It is easier to keep track of how many taxpayers have come to the tax authority to receive sensitization, and it's easier to provide information to taxpayers and make sure that taxpayers can more easily understand what their obligations are. With the deployment of a variety of different IT solutions, such as electronic billing machine or fiscal devices or cash registers, the name changes across country, it is becoming increasingly easier to have data on real time about the economic activities taking place in the country, and this allows revenue authorities to cross-check what a taxpayer declares for value-added taxes, for corporate income taxes, and then compare that with the information coming from customs. This can greatly increase the capacity of profiling taxpayers and understand what risk do they pose. And through this capacity, then doing audit of the taxpayers that are more likely to actually yield revenue once they are investigated has becoming easier and easier. And given the scarcity of audit resources, making sure that these are used effectively is increasingly important. At the same time, the availability of all of this information is making possible to start considering the exchange of information with other jurisdictions, be that on request or be that automatically. This could, over time, also create the opportunities for the discovery of a lot more revenue that might lie outside of a country's border. Again, all of this is extremely exciting and extremely promising, but I cannot stress enough that this is only possible if the data that a tax authority possesses is of good quality. So what are the main obstacles for having data of good quality, and what is required for this data to deliver? Now, there are a lot of different things that need to be in place. We've heard already the relevance of having a good infrastructure. That entails internet access, the availability of power. There have been countries who have started deploying electronic fiscal devices that did not have a battery. did not have any storage capacity internally. Every power outage will lead to having to reset the machine and restart everything from start. If the internet connection goes down, then the data doesn't go to the revenue authority. These are all lessons that have been learned, but the revenue authority cannot do much in terms of spurring investment in energy, spurring investment in internet capacity. What they can do is to collect revenue and try to convince government that these are worth things to invest in, but they cannot themselves invest in improving the electricity in the country. Other things are in control of the revenue authority, but they might be very costly. If one wants to start exchange information internationally through automatic exchanges, you might have to set up a secure perimeter that costs upwards to $1 million. So these are very costly things to take, to decide to undertake, and they do pay back, but it takes time. Whether or not automatic checks are included in the information that taxpayers provide can also play a very big role in ensuring that the data in your hand is actually of good quality. But that comes with a compliance cost, right? Like you have to decide whether or not to make it compulsory for your taxpayer to provide information once they file. And you can decide that if they do not give you their phone numbers, you're not going to let them go through and file their returns. You might also decide that you want to check whether the phone numbers they have provided is actually active or not. You might want to send an SMS. You might want to send an email to check whether the email provided is actually active, whether it's a duplicate. All of these, though, makes slightly more complex the process of registering. You might need to convince other MDAs, ministries, departments, and authorities. Sorry, we use a lot of acronyms in academia. Whether any of these other ministries, departments, and agencies have to collect some of the taxpayer information for you. And finally, a lot of obstacles lie in human resources. Data is only useful when there is capacity to analyze it. Data is only useful when the operational departments drive the IT reforms. If an IT system is forced by the IT department onto an operational department, then you'll have an IT system that nobody wants to use. So planning for change management and involving every department of the revenue authority as IT reforms are deployed is extremely important. Now, much of this might seem obvious, but some of these failures still somehow remain frequent. Why is this the case? Well, it could be because a lot of your taxpayers might find some of the data available, IT system available too complex or too costly, and they are very smart. They can often find ways to cheat the system. Some of these issues might be connected to the IT system you put in place. The forms might be too complex, they might not contain the right fields. Tax officials might resist a new system. They might fear of losing their job. There might be too many reforms pursued in conjunction, and that puts a strain on IT department and the capacity of your authorities to actually adapt to the continuing change. Some of the problem might be related to the system itself. They might not be fit for context, they're not being developed in countries, but being introduced from the outside. They might not be integrated, customs might not speak to IT, to VAT systems, and you might not have the actual funds to buy the source code from whoever your provider is, and then you remain dependent on them over time. Now, all of these obstacles are relevant, but there's one overarching thing that I really want to stress, and is that data is information. Information is power, and power is politics. So you should never, ever forget the fact that to really make the change that are required to move toward a digital public infrastructure system, you must have the whole of government behind you. You must have your senior management team supported by the Ministry of Finance, supported by Cabinet, in ensuring that whatever vested interest might exist across different MDAs is put aside in the interest of improving the effectiveness and efficiencies of government. Political support is extremely relevant in making sure that institutional and legal reforms takes place. And these are very often required to make data as useful as it can be. Now, I had a summary slide, but I have decided to switch the screen off because I pressed the wrong button. I had a summary slide, but I think that for the interest of time, we might probably leave it there and move over to this panel conversation. Thank you very much, and I hope you're going to have a good discussion.
Good morning, ladies and gentlemen. Thank you to our Sinceta Giovanni for kicking us off in this conversation. As already introduced, I am Pindile from the Kingdom of Eswatini. I am your moderator for this session. As Giovanni has already introduced our session, we are going to be discussing further on the topic data management to support co-administrative functions. And it has already rightly been highlighted, tax administrations are highly information-driven organization, and they rely heavily on data. So it is essential that an administration has strong data management practices. I like the great insights that Giovanni has already shared. I was just noting how he emphasized on data availability being central to the core functions of a modern tax administration. And he also mentioned quite extensively the issues around quality, the importance of ensuring data quality, touching on capacity issues, and also challenges related to taxpayers, the tax administration processes themselves, the systems, all of those affecting data management. And with the evolution, the technological advancements that we see, the digitization, the importance of data has only increased. So in this session, we want to unpack this topic a bit further. So now to deepen our conversation, I would like to start with you, Ronald. As rightly mentioned, in the past recent years, tax administration have made significant progress in digitization of their core processes, resulting in increased availability of data. So in your view, how can tax administration ensure that the full potential of administrative data is leveraged to strengthen their core operations? While you are discussing that, if you can also give case examples.
Thank you so much, my sister Pinde from the Kingdom. I think in the interest of time, I'll just simply say I'm Ronald Waiswa, as already introduced. I work with the African Tax Administration Forum. But now I'll go straight to the issues, given that I only have 5 minutes. I think I should start by saying that data is a strategic and a very valuable asset. And I think it is time to start assessing its fair value, and we treat it as a valuable asset as tax administrations. We need to start the concept of data valuation, where we attach a fair financial value to data. I think if we reach that point of even developing KPIs to measure the value of data in financial terms, for instance, how much revenue are we able to collect if we make optimal use of the available data, we shall go a long way in exploring the potential that we can get from the data. Yes, I think African tax administration forums have generally embraced automation to a higher degree. When you look at the available statistics reported to ATAF in the ATO, the African Tax Outlook, you find that as high as 70 or plus are using online systems for registration as well as filing tax returns. And this is very impressive. But I think automation has largely been driven by the idea of simplifying business processes. And because of this, I think to a less extent, automation has not been driven by the idea of developing systems that are intelligent enough to ensure efficient compliance management in the future. Because of this concept of oversimplifying business processes and being the major driver of automation in African tax administration forum administrations, I think this oversimplification has led to a situation where we are relaxing system controls, we are simplifying it for taxpayers, but because of that need, we are simplifying to an extent that we are leaving out the system controls, and as a result of that, wrong data is getting into the system. We are getting wrong data in the system, and that is affecting our efficiency in terms of compliance and monitoring. The other thing I wanted to talk about is the fact that when you look at the data that is coming through, and we have been doing this from the recent studies that we have been doing, there is so much that we need to work on. For instance, when you look at our tax systems in Africa, we depend largely on the withholding tax system. Africa, to tax it well, we mostly use the withholding system. And that is why in most African countries, pay as you earn is the major contributor. But because we are looking forward to simplifying, important information, which is like identification of the people we are withholding from, is not being corrected. And as a result, in future, when we want to look for the large taxpayers that we want to tax, we cannot identify them because we simplified, we are not correcting the right information that will help us to enforce in the future. We cannot go back and enforce on these taxpayers. I think that is the biggest problem. So we need to simplify these business processes, but also be deliberate about building systems that will help us to have comprehensive and intelligent tax systems to facilitate efficient tax compliance and monitoring in the future.
Thank you. Thank you very much, Ronald. Attaching monetary value to data, I love that. And I'm just going to take you back to the part where you mentioned the data quality challenges,
Yeah.
because even the earlier presentation touched on that. The quality of administrative data is very crucial for its usefulness. So in your experience, how have you evaluated data quality? And if you can mention also the steps to address those issues.
Thank you so much again. While I was still in URA, that is the Uganda Revenue Authority, we used to do a lot on process efficiency assessments and assessing the quality of data management. We largely assessed about 5 components. One being the data quality in terms of completeness. And by completeness, we're trying to assess whether the information that they are submitting to the tax administration is complete. It has all the fields that we require. And then the second component was on accuracy. You may find that you have developed a very good system, very good forms, but the quality in terms of accuracy of key information like tax identification numbers, address of the taxpayers is not accurate. So for instance, you ask for the address of the taxpayer and says, I'm located in Kigali, but where exactly in Kigali? So in terms of accuracy, there are issues there. And then the other component that we have been assessing is issues of consistency. To what extent are taxpayers giving us consistent information? Maybe even actually in the same form, you may find that you're asking for the same information on the same form at different points. But we realize that when you ask a taxpayer this information at point A, and you ask for the same information at point B, the information is not the same. So we look at consistency, either within the same form or when the same form is submitted multiple times. For instance, the income tax return, you find that maybe at the start of the year, when you're filing the new return, you'll ask for the opening stock, which ideally was the closing stock in the previous return. And then what we saw is that the information is usually not consistent. And then the other component that we are assessing, which is the fourth, is issues to do with permanency. We have an issue of allowing taxpayers to amend returns. In some tax administrations, this is not even limited. You can amend returns any number of times. And what we see in the data when we're doing that process efficiency, because of that allowance that you can amend your returns, people could amend returns any number of times. So at any point when you extract the data, if you come and extract it tomorrow, it will have changed. So at times the data is not permanent in the systems. And the other fifth component is about the uniqueness. In some tax administrations, what we have seen more recently, the assessment as ETAF that we have been doing some study in Africa, where we have been engaging different tax administrations on a study on taxing high net worth individuals. And what we have seen is in some systems within African tax administrations, you find that the data is not unique. You find scenarios where taxpayers are either having multiple TINs, tax identification numbers, or taxpayers being allowed to use a pseudo TIN which is not unique. and that complicates issues of data quality. And then in terms of the approach, if I'm sum this up, when we're doing this data management assessment, we took what we call, I think I'll use the word, a process approach. We looked at the core business processes of the tax administration. For instance, filing, to start with registration for tax, because that is the core and the first step. And so what we're doing is look at the registration process from start to end, and we identify where are the gaps. And then we could look at the form that is used to register and say, is this form actually complete? Is it giving us the right information? To try to identify the gaps on the registration form. And after looking at the form, then we could get into the data and try to extract the data on each of the variables that is provided for on the form, and try to see how complete, how accurate, how permanent is this information. So we look at that, start with the process, maybe registration, filing of returns, and do it a 360 assessment. Get to the form, is it having all the variables that we are looking for? Get to the data and try to see, is the data in the system consistent with what we intended on the form? And after that, we also then engaged in stakeholder engagements to try to understand the why. Because at times you get data gaps in the system and you're wondering, what is the issue? And like Gio rightly put it, some of the issues mostly are people related. Because we assess them on quantity and not quality, people were just clicking, click, approve a return, approve registration, and the quality is not even about the system, it's not about the forms, but it is about the stuff that we have put at the gate to manage the end of the day.
Yeah. Yeah. Thank you very much, Ronald. I like the energy and the passion I see in there, and I believe some of us from revenue administration are getting quite so much value from that. But for now, I'm going to move to Dennis. From the Rwanda Revenue Authority. Such a warm welcome, such a warm and welcoming atmosphere in your country. It's my first time here, and I'm really enjoying it. It's exciting. That's on a lighter note. Now, Ronald has touched on the issues with data, and we know that with automation, digitization, the volumes of data have become more. We are now managing large amounts of data as tax administration. And I'm excited because you are from a revenue administration yourself. And I would want to know, how does RRA manage big data? Are there any challenges that you have faced in the adoption of these big data analytics, if I may put it?
Yeah, thank you so much. And again, welcome to Rwanda. I'm glad to hear that you're having a good time so far. Good morning, everyone. So I think the big data management in the area is centered around having a centralized management system of the entire data, right from the entry points of the data to its natural life, if I may call it that, until the archiving stage. So this involves, around building systems to capture the data, safeguard the data, provide the security around it, and then to the ultimate usage and down to the archiving and destruction if it has to. So that's why you see that the tax administration will have systems like the e-tax to capture the entry point for filing and the payment of returns. You'll have the electronic billing machines which bring in the sales data. And when I'm still at that, let me also request that as you're staying and enjoying your presence in Rwanda, please ensure that you get your EBM receipts so that you contribute to the tax system and give us visibility of the sales. So it's around that, and then you're again providing the systems also to accommodate external data sources. So around, I think that's where we are looking at in terms of our big data management. And then when it comes to drawing around the challenges, definitely big data comes with its due challenges. Some of those have been touched by my colleague Ronald when it comes to the quality of the data. I'll not go into deep because he really touched about that, the quality in terms of the accuracy, the breadth of the data. But the other thing I'd also want to bring in is a challenge that is related to the integration of the data. When there are so many data systems, data sources. And I'll give an example from the EBM. When we started the EBM, it started with capturing data in a pictorial nature. So for analysis purposes, that provided it a challenge of its own. So those are some of the things that inspired us to move into the EBM version 2, so that we make it more user-related in terms of the tax administration. Then also the systems that you integrate with have their own, they're varied. The bank uses a different system, now bringing it into the tax administration. So all those challenges, you have to navigate as a system, as a tax administration. But the other challenge also comes with the capacity within the tax administration to utilize the data. So it means you have to build capacity around big data analytics. You have to build capacity around, so that you get meaningful insights from the data. But also the capacity within the tax administration of the IT systems, the IT, to make sure that you safeguard this information and, provide security of the data, provide the IT staff to build even more data sources and enhance what's available. So I'm seeing I'm being warned of time. Let me stop there for now. Thank you.
Thank you very much, Dennis. Great insights as well there. And you touched also on data sources, the integration of data. And I'm sure we know, as tax administrations, to strengthen our compliance enforcement activities, we do sometimes require now data outside of our own systems. So third-party data plays a crucial role in ensuring that we enforce our compliance activities fully. So in the case of RRA, how have you used third-party data to address non-compliance issues and as well increase revenue collections? If you have a case study on that, or you can just give us points on that.
I think there's so many examples I would turn to, because as RRA we have really moved into decisions based on data. But for the interest of time, I'll just focus on one of the key aspects that we've embroidered in terms of utilizing data to inform decisions, is right from the entry point of taxpayer registration, which if most of you work within the tax administration will know that this is the entry point for us to do our business as tax administrators. So we had issues of multiple registrations, multiple, as you register, you're given a TIN. So there are so many people who are, entering and exiting at free will, but because we did not have a way of checking some of these entrants. So one of the things that we did is integrate our data system or our data with the National Identification Agency. So that gives us at least visibility in terms of the registration, the national ID registration of the taxpayer, the tax registrant, and the tax administration. So as you keep evolving, you're still maintaining the national identity. So that gives us a bit of a cross-check. And it helped us actually, clean our tax registry, making sure that we have the right taxpayers in the taxpayer registry. And another example is, of course, integration with the Ministry of Finance with the IFMIS system that is used to pay government procurement. So one of the things that we had, I think, was, it was also burdensome for taxpayers to, for instance, prove to us that they've been paid by government. So it was the onus was on them to go enforce the ministry to come and report to the tax administration. But with this integration, this has become seamless. The taxpayer no longer has to come to the tax administration to justify it's already integrated to the point that the ministry already reports that taxpayer Ronald has been withheld this amount, so it goes straight to their tax account, and then it simplifies the whole tax administration. So yeah, there are so many examples, but again, in the interest of time, I'll leave at that.
Thank you very much, Dennis. Indeed, as the earlier speakers have already touched on the technological advancements here in Rwanda, we are learning maybe some of us tax administrations, we face the challenges where our systems tend to be way ahead than the partners we are willing to integrate with. But I like how Rwanda has been able to pull that off. For now, I'll move to Rose. Rose has already been introduced as a lecturer, an assistant lecturer, whose research, I can add on that, whose research focuses on taxation and public finance, and she leverages on administrative data. Welcome, Rose. Finally, some gender balance in this panel. So, for you, I think I would like to know, in your experience, your research experience, how have you used different types of data to conduct research, and what challenges have you encountered now on the side of conducting research with the administrative data?
Yeah, thank you so much for the nice introduction. I would like to start by thanking the ICTD for inviting me and also for financially supporting some of my research. I'm very grateful for that. My name is Rose Vincent. I'm an assistant professor, and I work primarily on research related to taxation and local public finance. So I do use various administrative data sources, including individual taxpayer data or firm-level taxation data, as well as local government accounts and regional government accounts. Two of the main challenges I can detail on today is the first one is the parallel registry. To give an example, I think that was already mentioned by our colleague Giovanni. My co-PI and I, we have been working on a large-scale project in collaboration with the Uganda Revenue Authority and the Kampala Capital City Authority. Actually, our colleague Ronald here is a pioneer of that project when we started like six and a half years ago. And one of the primary challenges of that project is the parallel registry between the KCC and the URA. Very briefly, if you're a firm based in Kampala, you're required to purchase a trade license from the Kampala Capital City Authority, and at the same time file some form of like business income tax with the Uganda Revenue Authority. Now, for many years, the KCCA and the URA, they have been having their parallel registry, and that really causes a lot of challenges to merge and match the data on the same firm and analyze, for instance, compliance across the board over time, because the primary objective of our research is to understand compliance of businesses in a multi-level taxation structure with limited coordination across different agencies or across different layers. We are aware of the TRAP initiative that KCCA, URA, and the Uganda Registration Bureau implemented a couple of years ago, whereby if you're a firm and you want to register your business, you will get at the same time a TIN number, which is predominantly used by the URA, a QUEN number, which is the city operation identification number primarily used by the KCCA, and another identification with the Uganda Registration Bureau. Now, what we've noticed in the data in the merging process is that firms that registered through this TRAP initiative, they were most likely found on both sides of the aisle, so the merging was easier for those firms, but it turns out that for many other firms in Kampala, this parallel registry means that we are unable to properly trace the firms across time and across the two registries. Of course, we are extremely grateful, to the URA and the KCCA for their effort in helping us, circumventing this issue. But I would say this is one of the primary challenges. The second challenge I want to mention is really at the aggregate level. Let's say city level or local government level data. Now, while there is, for instance, the system of national accounts, which is basically applicable to national account data at the national level, we do not really have guidelines on how to aggregate local taxation data at the subnational level. I contribute to the World Observatory on Subnational Finance and Investment, which is this initiative by the OECD to actually make local data available for a large number of countries. And we've been having discussion about how to potentially compare, for instance, two communes, one in Burkina Faso, another one in Mali, but across the border, which probably share, a common language, a common ethnic background, but really their fiscal data on both sides of the border. And that has been extremely difficult because we don't really have an international, agreement on how to report local fiscal data across countries and even within country, because sometimes in Burkina Faso or Mali, where I'm also doing some research, there have been discrepancies on how local government report their taxation data. So my appreciation of these challenges as a researcher is like when we are thinking about digitization, we should also think about how this applies to not just national government or firm level or individual level tax data, but how do we also integrate other layers of government and other, smaller, tiny jurisdictions into this, this process of digitization and providing accurate data for researchers. I hope that answers the question.
Indeed, indeed. Thank you very much, Rose, for that comprehensive response. You have rightly touched on the challenges on quality, the discrepancies, and other speakers have also alluded into that. But with that, I'm now interested in knowing your view on the data management practices that tax administrations need to adopt. What would, in your view, be the essential data management practices for tax administrations in light of some of the challenges that you have already mentioned?
Yeah, so in my view, there are a number of essential practices, and I think one key has already been mentioned by the representative of the Ministry of ICT and Innovation in Rwanda, which is this aspect of interoperability of tax data. I believe that those data points or data sets should flow quite swiftly across agencies, and again, that is referring to the challenges that I've faced in Uganda in my own research project. And I already mentioned that through the TREP initiative, for instance, the sample of firms that were registered through this initiative, we could more or less follow them throughout the years across the different data sets that we've been using from the KCCA and URA. So I would say centralization and interoperability, having, for instance, a unique identification, or it can be anonymized, of course, for data protection, but that identification could allow us to follow a single taxpayer, from one agency to another, be it about paying taxes or receiving, for instance, tax credits or some other benefits. So I do think that this aspect of interoperability is absolutely key for tax data management, for instance. A second aspect, I would say, is probably regular audits and data validation, and I think my colleague Ronald already pointed to that and how they sort of conducted these regular audits and data validation at the URA. I do believe that it's a crucial aspect. It's not just, doing this data validation at the time of enforcement, but making it like a core practice on a daily basis or a daily task for the tax administration. And my experience interacting with the URA Tax Lab, we've been conducting this research for a couple of years now, and whenever we notice some discrepancies in the data or some major outliers, we would report back to the lab technician, and this back and forth with the lab technician, with the URA, with colleagues at the KCCA also ensured that we are only using some credible observations in the data, and then that also allowed us to check, okay, what is really wrong with some of the observations where we have these outliers. And I believe having these audits and data validation as part of a core program or capacity building program within the tax administrations that could really help, curating the data and making a clean data set available to researchers and to other interested parties.
Thank you very much, Rose, for that. We do want to get our audience in on this conversation, but before I get into that, I would like to hear maybe from my two gentlemen panelists here, just one last question related to what also Rose has just touched on, the data quality, the data management challenges. What would you say are the opportunities from your end for revenue administrations to improve performance using data? I'll start with you, Ronald, and then go over to Dennis.
Thank you so much. I think for me, in terms of the opportunities, the first thing is that at least now, tax administrations and all of us, we now know that IT is the way to go. So we already have something. I think it's just important to go and we try to reevaluate what exactly is in these systems. Then the other important opportunity is the fact that there are now institutions, which are even African-based, that are willing to support. ATAF is there willing to support. ICTD is actually more African. They do quite a lot of support here on the African continent. So these institutions should help us to do these business process efficiency assessments. But also ATAF, our applied research, we have reformed it significantly. And what we are trying to do now is to try to document best practices that other African countries can learn from each other. So when we do these studies, what we are trying to do is to document lessons from different tax administrations. So if you want to know what another tax administration is doing, it's about going into some of these papers, and lessons are there. We have documented lessons from some of the key giants within the African tax space. We have lessons from Kenya, lessons from Eswatini, we have lessons from Rwanda, lessons from Uganda. Other tax administrations just need to go and benchmark, and we are trying to point them to where they can learn from. So I think it's important to reach out. Some of this service or support is free. You just need to write to ATAF, you just need to write to ICTD, and they should be able to support these African tax administrations on improving their business processes. Yeah.
All right. Thank you. Dennis?
Yeah. Again, I think there are immense opportunities with this big data and where we are going with for tax administration. Over the years, I think most tax administrations have always been chasing non-compliance or trying to, But now these are opportunities with all this information at our disposal, with all this, to actually be proactive. Instead of chasing, this time we are being, proactive. Because all this information gives us a bit of insights of the behaviors of the stakeholders or agencies or institutions or individuals we're working with. So it gives us an opportunity to intervene before non-compliance happens. To intervene before someone is tending towards becoming non-compliant, and then how do you intervene? Is it through education? Is it through visiting and all this? So all these opportunities are so great because of the information that we have at our disposal. But it also provides us opportunities, again, to enhance what we've done as of now. I think the representative from the Ministry of ICT said about the e-government. Now, as the government of Rwanda is embracing and moving towards this, the e-functioning, it gives the tax administration an opportunity to integrate further within the government. We've already started this journey, but now that it's being driven at a broader perspective, then it gives us a chance as well, tax administration, to integrate further with these institutions. In terms of functionality as well of the tax administration, enhancing our services can never be even a lot easier with these opportunities coming to board. I know aspects like e-filing, pre-filling of returns. There are so many things that we take for granted. For small, especially the small taxpayers who, are finding it hard. They do not have the resources to call on the specialists, tax agents. But with all this information, we can actually do that for them as tax administration. Pre-fill their returns and just give it out to them, and then all they can do is, yes, I concur, I do not. And as a ROL list, we've put this and highlighted this in our current strategic plan going forward, that we need to look at this and make this at the center of our business. So yeah, I'll stop on that.
Thank you very much, Dennis. You gave quite a comprehensive response there. I like the point about being proactive. After all, we have the data, we have the information to give us the insights to move before and not chase, to move away from the reactive plans and be much more proactive in our approaches to addressing non-compliance issues. At this point, I think I would like your help on this one, MC, because I would like to hear from the audience now on this topic. Our panelists have greatly shared their perspective, the information, and As you could already tell, we have a rich crop of panelists here, and they would love to hear also from you if you have questions and comments for them. MC, help me.
Siyakubongela Pindile, vele usebenzile. And usasebenza because you are still going on. And thank you also to the panelists. We are going to have 30 minutes Q&A with the audience, and there will be mics going around. So if you can just put your hand up, and a mic will come to you, and then you can give us your ideas or also have questions about that, about what we have just spoken about. And indeed, having quality data is quite important. One thing I know is that if your data doesn't have proper volume, velocity, variety, veracity, and value, because those are the 5 V's of data quality, then you have an issue. And one thing I know is that when I'm doing my research, if my project is set out for 3 months, a chunk of that is taken by ensuring the data quality. Yeah. So I'm sure that you probably have a lot that you can give to us with regards to that. Thank you.
Hi. It's been a very, it's quite thought-provoking, very insightful. My name is Kwame Fianco from the Ghana Revenue Authority. And a lot interested in data interoperability. So how you manage the problems from one institution to the other. And for me, it's an area that has been very, we in the Ghana Revenue Authority have also been challenged with, that we are finding ways of addressing. And from the panel, the panel members, what I want to know, especially from Dennis, how you have addressed, have you ever been, I would say, tempted to try to resolve a problem that you have onboarded from one agency? You mentioned that I think just like us, you leverage on the national ID. Now, if there are data management issues that have been created from there, essentially it's going to impact what you're going to do at your end. And how have you been able to address some of those core data management issues if in the absence of a common national data management framework to address that? How have you tried to manage that or go around that? Thank you.
Okay, thank you very much. My name is Sintayo. First I have probably a comment, which is about quality. I don't think there is any tax administration that has started with, high quality, high standard data, right? It's a lesson we learn, and especially if it starts with a clearly defined use case, the end product. Okay, so for example, you want to detect non-filers as early as possible, and that becomes a use case, and then you look at your data, and if there are gaps here and there, then you correct it. So the quality aspect, as much as it is important, it requires a continuous improvement in for a lot of administrations, and I think that's what Dennis you have said. My question is regarding predictability. Predictability from the perspective of compliance, and predictability from the perspective of services that tax administrations offer. So, is there any experience in any tax administration in Africa where the administration is trying to determine how predictable its services are, and to what extent they have used to improve services? And the second is, have there been again any experience in determining or rather determining predictability of compliance, as could be about the registration, could be about the filing component, or correct reporting in any one of those those 4 angles. So if you can share, especially from ATAF, if there has been any experience. If not, what do you think we can do at this moment to introduce that angle? Thank you.
Okay, Alex Combat from the Ghana Revenue Authority. Yeah, so it is very clear that quality data can help African countries improve on revenue performance. So my question goes to Ronald, that is from ATAF. So what is ATAF doing in terms of helping African countries improve on data quality? I'm talking about logistical support, technical support, and even training. So what is ATAF doing in this regard? Because we know ATAF is a forum for African countries, and they should be able to help in this regard. Thank you very much.
Thank you, our presenters. Nalukwago Mili Singoma from the Central Bank of Uganda. And I would like to pitch my question to Dennis about the big data, how you're addressing big data. There's all this excitement about big data, but we also know it comes with a lot of variety, and you've talked about getting data from other systems into your system. It is high speed and with very high volume. So how are you addressing the area of the metadata? Because if we are to do analysis of this data, it's very important that we are able to interpret this data that is coming from, especially external sources. And I want to give a practical example that, for example, I'm not sure you are accessing the supervision technology data from the Central Bank of Rwanda, but in case you are, please throw some light on how you are linking it now with your IFRIS. Your IFRIS is what? EBM? Or your EBM? Eh? And getting insights out of those two sets with reference to the descriptors, the metadata. What is the practical experience? Thank you.
Thank you, ladies and gentlemen. I think at this point, I would like to take the round of answers from our panelists before we move on to another set of questions. Colleagues, I think we have 4 questions from the floor. 2 were directed to ATAF, Ronald, and then we have 2 also for Dennis. I think we can quickly respond to those and then move on to another set of questions from the audience.
Yeah, very interesting questions, and actually they're very hard. I may not have all the responses, but yeah, I think maybe when it starts with the issues in terms of handling third-party data. So managing the issues that come with it, and you're right. There's lots of things because like that's out of your boundaries in terms of the tax administration controlling the quality of issues. But I think one of the things that we've done as RRA is engage institutions at a more high level. They're trying to engage in bilateral discussions on why we need these data sources and why. And so getting them to understand the value of their data has actually helped them, and sharing experiences on how we manage certain instances, in terms of the data entry. Some of these institutions, like I think the moderator here said, the tax administration has always been a bit faster in getting things moving. So the other agencies, mainly in the government, have been, more of chasing. So there are so many things that we've taken a leap in terms of providing the data security, in terms of how, the systems. So we've actually been able to share with them some of the best practices within the tax administration, and that has also elevated them in trying to come with that open mind. But also we've engaged in MOUs, try to clarify some of the things that spell out also how we manage data with these agencies, and it has given us a bit of a mileage, in having, in case we are having issues with data that we are receiving, how would we resolve these issues? So it has given us a leeway, mileage in trying to resolve some of these issues that we experience with this third data. But again, it's not always, it's not always been smooth sailing. I know we've also engaged in within the local government when we took on the function of supporting and collecting the data from on behalf of local government. They didn't have a system. So again, in our engagements, there's a commitment for the tax administration to develop a system that will help, so that, it gave us also, the opportunity to benefit from what we had already developed that we shared with them, and they were gives them that confidence that we are doing it, in line with the data governance provisions within our tax administration. So that's one of them. The other question, I think, in terms of from my colleague Millie, how we are handling the metadata and how we are able to interlink these the information that is coming through. And I think she gives us a good example, because I would ride with the same arrangement we've had with the information that we've had exchanged between the tax administration and the National Bank as well. They rely a lot on the tax administration information on the EBMs or the IFRS, like you say, in terms of drawing consumer price indexes, and we also on our imports data, but also we use that as they draw the consumer price indexes and the information on the volume and flow of imports. But we use this to now check what the information that the National Institute of Statistics, for example, is giving in terms of this. And what it has given us is, working with the National Bank and the tax administration, using the tax administration data, has given us, again, the need to work with the third party, which is the National Institute of Statistics, on the same parameter that they develop using their own surveys. So in a way, we are able to see how these insights from the tax administration data is playing out against survey information. And the most interesting thing is you're seeing comparabilities. And when you see divergences, now it comes back to question, are we capturing something wrong? Is it something from the Institute of Statistics, the survey, is it giving us? So it gives us points of interjection, and it has helped us actually improve better in terms of the usage of metadata. So, yeah, I'll leave it at that. Thank you.
Yeah, I think I'll also start with the easiest question on what ATAF is doing to improve data quality. And maybe to start by saying that I may not have all the answers on what ATAF is doing, but fortunately, the Deputy Executive Secretary of ATAF is here, so she can answer all the other issues. She can deal with that. But maybe what I can say is ATAF is very good at developing toolkits or guidelines to guide on most of these issues. And I think last week when we were here, there was a technical team that is strictly developing a toolkit. Unfortunately, also one of the members on this technical team is Damaklin, who is also here, and therefore can give you more information on what this toolkit is all about. But it's all about helping tax administration to know, to guide them in terms of developing effective IT systems, but also guidelines on how they can develop, I think, a data governance framework. Damaklin can answer more to that, but I'm also happy to link you to the right people on how you can get access to this toolkit. I know it is still in development, But soon, maybe in the first quarter of next year, there will be a toolkit that will guide African tax administrations as far as efficient IT systems are concerned. Then the other issue on issues to do with onboarding data from other third-party organizations, there's something we saw in Uganda, and I think that was my last study that I did before I left the Uganda Revenue Authority. I think URA had integrated with the National ID Registry, and what we saw when we did the assessment is that when they integrated their systems with the National ID organization, these institutions have different objectives when they are collecting this data. So in the register for the ID, the national ID, we saw that for them they were interested in knowing where the taxpayer was born from or where the taxpayer is staying. Yet for a tax administration, their interest is where is your business. And now we saw a switch in the location of taxpayers. Before, when the Uganda Revenue Authority was registering, most of their taxpayers were within the central business area, which is Kampala. And when they integrated, we saw that now most of their taxpayers were in villages. And the reason they were in villages is because they picked the information from the National Registry, which National Registry was interested in knowing where you stay or where you were born. Now the risk was that the URA was now going to start looking for taxpayer in a village, yet the taxpayer's business is in a different location. So there are issues, and that is why it is extremely important to do this process efficiency. As you automate, as you integrate, it is important to assess the quality of data that is coming in, and then it will give you early warnings and see how best to get these errors before they get to higher levels.
Hey, thank you so much, gentlemen. I think we still have time for another last round of questions. Maybe we can have 3 or 4 questions from the audience.
Hi, everyone, and thank you to the presenter and the panelists for a very enlightening discussion. My name is Tuivwe Siwale. I'm from the International Growth Center. Yeah, and I wanted to touch on one point, which is enforcement. I think we know that one of the things that many African administrations struggle with is enforcement and or the perception among taxpayers that the Revenue Authority is not able to enforce its tax laws and compliance. One of the things that Giovanni mentioned in his presentation was a core function of tax administration is profiling and sort of doing risk assessment so that you know which taxpayers to focus on. And one of the concerns that you hear a lot from taxpayers is that the same taxpayers are targeted over and over again because they're the ones who are in the registry, and basically the risk system is not adjusted to the most risky taxpayers. What are some of the things that you are doing with regards to data to improve how you're targeting taxpayers and how you're improving enforcement? I'm particularly interested to hear how you are bringing in external data sources to better help you identify the most risky taxpayers. Thank you.
Thank you. I'm Wensi. I'm coming from Enabel, Belgium Development Agency. I just want to ask one question from ATAF representative. And of course, emphasizing on the data quality, and I was also looking at how African countries can increase taxpayer database. When you look at data management, as you all said, and again, I wanted just to hear from your side, your advice on African countries that are really having a very big number of informal sector. Because normally for data, informal sector might not have knowledge and skills or maybe incentives of providing data timely and with quality that you are looking for. The other point that I want to hear from your side is about your advice on also for African countries that are facing digital literacy, that is also a factor for not having the data on time and also with the quality that we are looking for. Thank you.
Okay, thank you very much. Very rich discussions. I'm Philip Kagbo from the National Revenue Authority, Sierra Leone. First, I have not heard anything about issues of a data management strategy. I know we heard about data quality. I know there's a session on data governance, the next one. But I think data management strategy is something that's important for an institution to have. I don't know whether in the case of Rwanda, you had it to also not only handle issues of data governance, but also the issue of data quality. As we've had data quality now, you've highlighted the issues, not only an issue of availability, because we have a lot of systems, but the accuracy of the data. So I don't know whether a data management strategy actually helps with that. And secondly, it's actually again to Dennis. You spoke about third-party integration, which is very important for access to third-party data. I don't know whether in the case of Rwanda, you had a national strategy for e-governance that made it very easy for cooperation from other MDAs that may need third-party data from without the need for an MOU for us to actually have access to data. Thank you.
Okay, thank you. I'm Aisha Mahmoud Hamman from the Federal Inland Revenue Service, Nigeria. Despite the potential for the research divisions to improve and inform policy making, research have generated tensions sometimes between the departments and other departments. So my question is, how do we manage the issue of trust when collecting data within the tax administration itself from other departments, when some are not feeling so comfortable giving out data, looking at researchers as exposers? Thank you.
Thank you. Another set of questions for our panelists here, and I think they were also this time very much directed to our gentlemen on stage. I have 4 questions, and 2 were rightly directed to, again, Ronald, and then the other 2 to Dennis. But I am sure, Rose, especially on the last issue of trust, if you have comments on that, you can also come in. In the interest of time, gentlemen, lady and gentlemen, please. You can start, Ronald, sorry.
Oh, okay. Thank you so much. I think, let me begin with this issue of the same taxpayers are targeted over and over again. I think for me, not, of course it's an issue, but being targeted over and over again may not be an issue if you're not complying. So if you're not complying, it's okay to keep targeting you over and over again until when you comply. However, the other reason why we have a small tax base and therefore we keep targeting the same taxpayers, again, it goes back to, are we using the information we have in the systems? Because if we use the information we have in the system, I'm sure we are able to identify more other taxpayers that we can focus on. And like I mentioned, when we got into the systems of URA, when I was still there, and even recently when we have been doing this as ATAF, we have come to identify that there are so many big taxpayers in the tax systems, and because we are not doing this data mining and then trying to identify these taxpayers, we keep looking for the same taxpayers that are contributing. But if we get into the system, there is gold in the data. In URA, every time we used to present this, some people could say, that is not possible, that is not possible. And then you simply tell them, can you log in the system, and you check, and they actually find that is the same. And we have seen this when we have been doing this in Africa again this year with ETAP. You present results and they say, no, that is not possible, and you're like, check. And when they check, they really identify that there are big players there that are supposed to be registered for taxes, but they are not registered, but they are floating within the system. So for me, it is about getting into the system. Tax administrations have tried to push this by trying to go with the so-called informal sector, and then they end up going on the street and we register so many, which is also good to bring them in the tax base. But again, we are overspending on them and then bringing in very little revenue. Let's get into the data. Let's develop intelligent tax systems that are able to mine these big people that are floating within the tax systems. I think it is a very good starting point to do. I think that's what I can say.
Yeah.
And maybe on the issue of trust, I've also witnessed this in some institutions. In some tax administrations, I think they have tried to open it up, where staff within the tax administration have access to the systems, and they can now mine the data and try to identify these issues. In some other tax administrations, even internal staff don't have access to these systems, and it is only those in IT, and someone in IT, is not a data person. And so because of these restrictions, it's a problem, but now that is a governance issue that needs to be dealt with the tax administration themselves.
Thank you, Ronald. Yes, Dennis, I think you had also two questions there, one for relating to enforcement, and then also one from Philip, who wanted to know on your data management strategies. But as rightly said, Philip, there is a session on data governance that is coming up, so more will be deliberated there. I am hopeful. But please, Dennis, if you have something to share on that.
Yeah, thank you. And so in terms of, when it comes to enforcement, yes, I think the access to data has really played a big role in pushing enforcement. And again, Ronald, as I also touched a bit on it, is having information, but also utilizing this information to do tax administration business. So yes, even before we even go to the third party, even using this information within the tax administration itself. I know there are so many instances, as I'm aware. And on the other hand, these are defaulters within the tax administration. So by integrating, the tax administration is able to flag and, non-defaulters or non-payers, and then those are able to be, to be flagged even at the payment level. So before they are paid, at least, we are seeing the transactions going to who, and then you're able to, to enforce that the compliance of the taxpayers at that level of payment, And the use of things like tax clearance certificates in other government businesses, that also, in a way, brings about compliance of taxpayers, reinforcing taxpayer compliance, because they will not get that certificate if they're not really compliant. So we've seen instances where they come and, they engage us in payment plans because they have to undertake business with government agencies. So, all these are examples of how third-party informational integration is useful. In terms of the data governance strategy, Philip, I think it is very, very paramount that data governance is strategy. It gives you an intentional direction that you're taking as a tax administration in terms of how you manage and utilize your data. It gives you a broader picture on how you're going to, what you've put in place in terms of accessing this information, in terms of providing security around this information, and in terms of, how you disseminate this information. It gives you all these broad guidances, and then, comes down into how you implement the different broad provisions that you're going to. And I'm pretty sure there's going to be a lot of delve into it into the next phases. So I think...
Yes, thank you.
So much.
Thank you very much, Dennis. Ladies and gentlemen, believe me, this conversation can go on and on and on, but unfortunately, we have other sessions coming up. At this point, I would say we've gotten to the end of this session in this stage, but our panelists are still here. You can engage directly one-on-one on any of the issues that they deliberated on if you have questions and further follow-ups. I would like to thank you, all my panelists here. Thank you, our very energetic audience. You made this session very rich in terms of the questions you asked, and to my knowledgeable panelists here. Unfortunately, in respect of time, for a parting shot from each one of you, I can only give you 30 seconds if you have just anything to say in the 30 seconds as we wrap up the session. I will start with you, Rose.
Yes, thank you so much. So on the last question of trust, I would like to emphasize that transparency should be the goal. So when we sign MOUs with tax administration and as researchers we get access to the data, we should make sure that the scripts and our analysis and our research design is, they are fully available to the tax administration. So then if we flag any issues, that those issues could be discussed and being looked upon very positively, right? So because if we flag any discrepancies, then there are reasons for us to think about how to resolve these discrepancies in the data. So we should always aim for transparency, making our analysis available to the tax administration, or perhaps doing it together with the tax administration so we can tackle some of these issues that we have raised today.
Thank you. Dennis?
I think the only thing I would just want to say is that the big data before us, we are not going backwards. I think as tax administrations, we are instead moving forward because every day, every new things are coming up, and those are all opportunities to gather more information. So as tax administrations, there is more to come. As we're talking of changing systems, optimizing our services and all that, there's a lot. But also, this is also an opportunity for the researchers in the room. There's an opportunity for actually more engagement, because these opportunities are only providing a window for improving where we're heading in terms of domestic revenue mobilization.
Thank you. I think for me, two things. One, let's look at data as an asset and let's attach a financial value to it. Mm-hmm. Let's start conversations on data valuation to try to see what is the financial value of this data set. And then two, as tax administration, we really need to do a business process efficiency, process by process. We did this in URA, I think, with Mile before she started managing our money in Uganda. She was really very good in these business processes assessment. So I think you can reach out to ATAF, you can reach out to all these other African institutions. I think we can support as far as doing business process efficiency. They must do it for most of these key business processes.
Okay. Thank you very much, ladies and gentlemen. This marks the end of our session, and indeed, I think all the messages here, from all the messages here, we've rightly gathered that we need strong data management as tax administrations in order to be able to support our functions. Thank you. Thank you, MC.
Thank you very much, ladies and gentlemen. You should include yourself. Round of applause for our panelists, please. So we are about to have our coffee break. Please take note that we have posters there at the back. Just make note of which ones you're most interested in, because this afternoon we're going to be having a session where each poster will have a representative, and then you can have engagement with any questions or any discussions that you might have. For now, our coffee break is going to take about 25 minutes, so we should be seated back in the hall by 11:30, please. Enjoy yourselves. post is going to have its representative, and then you can engage with the different representatives accordingly. In this session, we will focus on the current issues and practices around governance, ownership, and privacy of administrative tax data. Speakers from diverse backgrounds, from tax administration to law and academia, will elaborate on the current debate on the governance frameworks required to ensure administrative data is collected, used, and shared transparently and efficiently. Our scene setter will be Professor Daisy Ogembo, Assistant Professor at the University of Birmingham. We will have a panel of 3 panelists and 1 moderator, a similar setting to the one we've just finished, and that's going to be continuing for the rest of the conference. Our panelists will be Damakreen Masira, Manager of Academic Research from the Kenya School of Administration. We will have Dr. Innocent Murasi, our Deputy Commissioner General from Rwanda Revenue Authority, and Nana Achia Mensah, Tax Policy and Legal Consultant from Shauri Consulting Limited. Our moderator will be Peter Henriksen Ringstad, Senior Advisor from the Norwegian Agency for Development Cooperation. We'll follow a similar setting. If we can have our scene setter come forward so that we can get things going. And our panelists, just as I call you up, please, if you can have a seat at the podium. Thank you.
Good morning, everyone. I just want to begin by thanking the ICTD team for inviting me to participate in this excellent conference. It's really lovely to be here. So my brief this morning, I'll just put a timer so that I don't talk too much, ramble on and on. My brief this morning, as I understand it, is just to provide a concise overview of the salient and contemporary issues in data governance and tax administration from an African perspective, paving the way for a very eminent panel to have a much fuller discussion than I can in just 15 minutes on some of the areas I will have touched on. So data governance is a very broad topic, and therefore in this brief period of time I propose to look at just 3 aspects of data governance. One is building accountable structures. The second is ensuring control and collaboration. The third is ensuring control and trust. And then I will conclude with just a brief word on artificial intelligence in tax administration. So I'll begin by just going straight into building accountable structures. And the way I intend to do this is just to briefly begin by discussing the key issues for consideration. And by no means it's not exhaustive, giving examples of current practice, and then concluding with some policy recommendations for each of those 3 aspects that I have just mentioned. So starting with building accountable structures, I identified 2 key issues I think we could talk about. One is, and we've already started talking about some of these issues in the previous session. The first is weak institutional frameworks. And a key concern in data governance is the fact that many countries have inconsistent or outdated governance frameworks. And these frameworks can often hinder the effective use of administrative tax data. For instance, it can be hard to adapt legacy frameworks to new economic realities, such as platform work or work in the digital economy or other aspects of the digital economy. And further, and connectedly, weak or outdated institutional frameworks contribute to the problem of limited interagency collaboration, which we already heard about in the first session. This is an issue of common concern in many countries. Often there's poor coordination between revenue authorities, customs, and other government entities such as the Registrar of Persons, Registrar of Vehicles, companies, registries, etc. And this often can and does often lead to fragmented data management. So we do have good examples of current practice. And just to mention a few countries, Kenya, Ethiopia, Uganda, Ghana, South Africa, just a few examples of countries where the adoption of centralized data platforms has the potential to expand the tax base, improve accuracy, and promote streamlined and transparent data governance. Also, more recently, the East African countries have adopted a harmonized data governance framework, and hopefully this is something that more and more regional bodies will be able to do. And third, Rwanda, as we've had this morning, is a really good example where the integration of digital payments with tax filing and mandatory e-services reflect a desire to really embed standardization and transparency in the administration process, thereby improving efficiency and reducing manual errors. There's always room for improvement. Issues around taxpayer trust and lack of clarity on how personal data is handled provide an opportunity for further improvement in data governance through more formalized and comprehensive data governance protocols. And that brings me to some policy recommendations, and I'm sure we'll hear some more from the panel. One would be the establishment of dedicated data governance units within tax administrations to oversee compliance with national and international standards. And secondly, the promotion of the development of regional governance frameworks supported by ATAF, as we had this morning, and other regional bodies to harmonize data sharing practices, because there's a lot of power in that sort of harmonization. And third, the implementation of regular audits and evaluations of governance systems in order to ensure, are key to ensuring accountability and responsiveness. And moving on to the second aspect, balancing control and collaboration, and this focus on issues around data ownership. Again, we've already started hearing some of these issues come up in the first panel. The first issue is ambiguity in data ownership, which is a critical concern because increasingly more and more tax administrations are collecting data from third parties, as we had, such as banks or mobile operators, raising questions about ultimate ownership. However, there are also issues around the quality of data, as we've heard, that tax administration receives and continues to hold, and the legal risk, importantly from a governance perspective, the legal risk that comes with making administrative decisions on the basis of unreliable data. And the second issue is an issue of public trust. Taxpayers often perceive tax authorities as opaque in their use of data in tax administration, and this can discourage compliance. It's therefore vital that there are clear rules in place regarding the ownership and use of data, and that those rules are applied in a manner that enhance rather than further erode public trust. So the application of these rules around the use of data is really important. And thirdly, there are issues around outsourcing risk, where revenue authorities engage private sector partners for tax management, for instance, the development of IT infrastructure. And there's a risk that such engagement can dilute state ownership of critical information. And therefore, such important or such critical contracts ought to be entered into cautiously and with appropriate legal advice. So some examples of current practices, we have URA with its integrated registration system, which highlights concerns around data sharing between agencies, and similarly in Ghana with data sharing between telecom operators and the state. And the questions these sort of collaboration raises: who truly owns and controls the data once it is shared? And similarly, the increased use of tax data for research and policy formulation, really good example of collaboration as a force for good. But somebody mentioned in the morning panel, really requires clear communication and understanding between the collaborating partners about how data is obtained, how it is used, and where ultimate ownership and responsibility lies. Some possible policy frameworks, policy recommendations. These risks I've discussed highlight the need for a clear legal framework, such as taxpayer charters, that just set out the roles and rights of tax administrations, third parties, and taxpayers. I think this is something that would be really interesting to hear more from the panel. There's also an opportunity here to create or integrate data stewardship roles to mediate between the various stakeholders and ensure that data ownership integrity will continue. And again, it will be interesting to hear from the panel whether these sort of roles already exist in some of the revenue authorities. And finally, really important, I think, to continue to encourage these opportunities for research-led tax administration and policy making, encouraging or using data to provide opportunities for anonymized data sets and data labs for researchers to continue to feed into administration and policy making, which is a really good way of striking a balance between data ownership and public utility. Moving on to privacy, ensuring control and trust. And here, the two key issues I want to talk about, issues around data leaks that I'm sure we're all familiar with. Weak cybersecurity frameworks in tax administration, they have the potential to expose taxpayer data to breaches. And emerging technologies such as AI as well, which I'll speak about briefly. These privacy risks of automated system and AI-based tools are also a concern. And some current practices that I wanted to mention, a good first step is the Malabo Convention on Cybersecurity and Personal Data Protection. There have also been some other regional approaches, but similarly unilateral measures in countries such as Ghana, Nigeria, Senegal, Kenya, Uganda, Rwanda, Angola, Mauritius, South Africa, Zambia, and Morocco, where the Data Protection Authority requires continuous data protection risk assessments. And the policy recommendations are linked to that, build on that. One would be privacy by design frameworks, where revenue authorities embed privacy considerations into every single stage of tax data management. And secondly is encouraging more countries to sign on to the Malabo Convention. I think when I checked, I think only about 13 countries have signed up to this. And so especially this is especially important for countries without unilateral measures. So I want to just take the last few minutes to talk about artificial intelligence. This is sort of an emerging area. And I came across this headline not too long ago. Kenya's authority to explore AI and machine learning to detect tax evasion. And I'm sure this is not unique to Kenya. I'm sure this is a step that many revenue authorities are making. And I just wanted to mention sort of some of the risks. I think there's fantastic benefits to artificial intelligence, but risks as well. And that's why I talk about caution, proceeding with caution. So some risks to taxpayers, I think, is a potential risk of algorithmic bias, where AI systems, it's been shown in other areas outside of tax, that they may inadvertently favor or disadvantage specific taxpayer groups, leading to unfair treatment or incorrect decisions. There's also concerns around transparency issues, where taxpayers don't understand the legal basis for the decisions that have been made on their cases, therefore reducing their ability to legally contest errors effectively. But also issues around privacy concerns, which I mentioned in the previous slides. The increased data usage by AI systems raises risks of unauthorized access or misuse of sensitive taxpayer information. And fourth is issues around legal challenges, lack of clear recourse for taxpayers to challenge AI-driven decisions could undermine trust in the revenue authority. But the risks are not just about risks to taxpayers. There are risks for revenue authorities as well. Issues around accountability and oversight. Reliance on AI could make it harder for tax authorities to explain and justify decisions if those systems are not sufficiently transparent, if they're opaque or poorly understood. There are also problems around technical failures, errors or bugs in the system may lead to widespread incorrect assessments, which really would do significant damage to public confidence. There are also ethical and legal risks, which are important from a governance perspective, mismanagement of AI or insufficient safeguards could result in lawsuits for the tax authority or non-compliance with regulatory standards. And all of these could contribute finally to reputational damage because of perceptions of bias or misuse of taxpayer data, which could erode trust in the tax authority. And we know that trust is an important aspect of tax compliance. And there's a really fantastic report that was recently released. I've shared a link there by the IFS, and just really makes a good point about the importance of thinking carefully about AI in automated decision-making, because tax authorities have legal powers to make discretionary or subjective administrative decisions. And using AI, incorporating AI in those discretionary decisions represents a real fundamental shift in the basis of decision-making by tax authorities. And there's a need for transparency in this. There's a need for tax authorities to be transparent about how these decisions are made, and really to have clear policy guiding movement in this direction. So I think, and Nathwani proposes this in the report as well, for revenue authorities to consider AI frameworks or charters with just to make sure that these policies or these charters or these safeguards provide for justiciable, measurable, and legally enforceable safeguards to protect both revenue authorities and taxpayers from the risks I have mentioned. And so with that, I leave it to the panel to just pick up the strands of interest to them for further discussion. Thank you.
Thank you, Daisy, for that excellent scene setting. My name is Peter Ringstad. I represent the Norwegian Agency for Development Cooperation. It's an honor and privilege to be here. ICTD we are very happy and proud for our association and our support to ICTD. So I'm very glad to be here. Also see that NORAD section for governance, which I represent, and our Tax for Development work, we have a lot of partners that are here today, both ATAF, Tax Justice Africa, and also the World Bank I saw in the program. So it's really an ecosystem of a lot of actors that are contributing in supporting this agenda, which is great to see. It's also very a special sort of honor to be here in Rwanda, coming from Norway, because the Norwegian Tax Administration has a very strong collaboration with the Rwanda revenue authorities going back now a few years. And I think that work has been, it's been great to follow that work. It's great to see two tax administrations working side by side and do joint problem solving. And I also want to say, on coming from the Norwegian perspective, this is also quite interesting and beneficial for the Norwegian tax administrations. Working together with RRA, which is a very ambitious and very impatient tax administration, that wants to do in 2-3 years what the Norwegian tax administration maybe spent 20 years doing. The feedback we get from the Norwegian IT people that working together with RRA is that they learn a lot, and they actually challenge a lot of their thinking and their assumptions with working together with RRA. So it's not just about sort of the development of RRA, it's actually very mutually beneficial. So, so setting that aside, I'm not an expert, so I'm very happy to be in a position here to ask the questions, not providing the answers. I'm from the section of governance. The only governance I will be doing is time governance. And so I have the responsibility to bring you to lunch on time, and I take that very seriously. So we will do a round of questions for our excellent panel. and you will get 3 questions each. And I'm basing the questions on the structure that Daisy laid out on issues of governance, data ownership, and privacy. So I will give you a sign when you sort of have 1 minute left, and don't worry, you'll get the opportunity to talk more later. And I also want the audience to prepare your excellent questions, because we will have our Q&A sessions. Without further ado, I would like to turn to Damakrin and Kenya as the first panelist. From my understanding, KRI, Kenya Revenue Authority, has set a very ambitious targets for the process of digitalizing. I wondered if you could outline just how KRA has approached the issues mentioned by Daisy as a part of your strategy for the digitalization of the tax administration. So you have 5 minutes, and I'll give you the 1 minute sign.
Thank you. So good morning, and thank you to Daisy for that great presentation. KRA started this journey in 2013. So I'll talk about the institutional frameworks and then the interagency collaborations that we are leveraging on. In 2013, KRA set out on a transformation journey. So the theme was transformation journey, and this was clustered into 5 thematic areas. One key thematic area was data-driven. And that brought together departments. So as it is in our structure, we have various departments. Brought together departments to look at all the processes within Kenya Revenue Authority and map them out to see how can we transform the registration process, for instance. When we're looking at audit, when we're looking at compliance, how can we transform it? Looking at all the departments, what role does each key department play? So that mapping was done. That was the transformation journey. Then we moved to the ICT strategy. I think we're on our 5th ICT strategy, but I'm glad that we have my ICT colleagues who definitely give more light, shed more light on that. So the ICT strategy, then having mapped out that, then the ICT strategy lays out a digitalization journey. Where do we need to start from? What do we need to do when it comes to the various processes? So these are some of the enablers when we're looking at institutional frameworks. This is also anchored in the corporate plans, in the KRA strategic corporate plans, and we are in our 9th corporate plan. So in all the corporate plans, we have the digitalization journey. Looking, and this is married to the ICT strategy and the data governance frameworks. What do we need to do? And it's in a phased approach. And finally, we did establish a corporate data governance office in 2018. And the data governance office was now focusing on data governance. And after looking at data governance, how do we leverage on this data for decision making? So we have 2 arms in the data governance office, the data governance and the business intelligence. After we have set out data governance, then how do we use that data? Then I'll move to some of the functions that we have in place. At the board level, we have what we call the strategic board committees. Now this, in the strategic board committees, we have members of the KRA board who have an IT and data background, who sit in the board, who sit in this board to look at some of these digitalization projects that we have at KRA. And the progress is monitored on a quarterly basis. After that, we then have the top management, we call it Team 1, which involves all the commissioners and the Commissioner General. But at the business level, we have what we're calling the business transformation officers. So at the domestic taxes department, the customs department, we have business transformation officers constantly looking at the processes and looking at what do we need to enhance, what do we need to look at, and how can we transform it, and they work together with the IT. So the business transformation officers have IT experts and the business experts who work together, the business analysts. So that's in regards to institutional frameworks. When it comes to the interagency collaborations, it's been a journey, but we have, when we rolled out, or the first time we rolled out the iTax system in 2015, we got into a collaboration with the Ministry of Interior that houses the National Registration Bureau. Under the National Registration Bureau, we have what we call the Integrated Population Registration Service, which hosts all the individual data. So any individual in Kenya, be it citizen or non-citizen, we're able to get access to that data through an integration with our iTax system. Then we do have a collaboration with the Business Registration Service, so we're able to get data of all businesses in the country. Then we integrated with the banks. So all the banks, we have a collaboration with all the banks in Kenya through a payment gateway system. So this is one of the greatest collaborations that really helped us enhance our processes in terms of, oh, okay, so 1 minute. Okay. The other collaboration that I think I should really talk about is collaboration with the National Treasury and employers. We're able to get data on real-time data on all employees in the country. There's still a gap with the government agencies, but this is work in progress. But in terms of interagency collaboration, our key objective here is to enhance data sharing. So there's a lot of integration and API projects that are ongoing to ensure that data sharing is enhanced through the interagency collaboration. I think I'll take the rest later. Thank you.
Thank you. Thank you, Damakreen, and you will be given the word again. So you can circle back to some of those points. Now, turning to Rwanda, we have the Deputy Commissioner here in the Senate. And I mentioned the ambition of RRA. In striving for rapid progress on this area, we are faced with both the drive from the top of increasing revenue for Rwanda and strengthening the tax administration. But at the same time, Rwanda has committed to international standards, such as those under the OECD Global Forum for Exchange of Information, which comes with a very specific and set of requirements, quite strong requirements. Sometimes there might be dilemmas where, for instance, what is the best for compliance with international standards might be different for what would be the easiest way to facilitate interagency collaboration. I know RRA is currently working on a new data governance strategy, and I wondered if you could share some insights on the central aspects of your new data governance strategy and some of these dilemmas or questions that you are grappling with. So, thank you.
Thank you, Peter, for the question. And as you're mentioning, digitizing 100% of government services is one of the NST2 objectives. And the data is one of the biggest inputs to that transformation. And RRA's data assets have been growing rapidly in recent years due to this ongoing digital transformation and making it one of the largest data repositories in the country. So last year, we started the journey of developing our data governance program, and I use the word program intentionally. And we have acquired a certain number of lessons. One is that to make an optimum use of the digital transformation in taxation requires a certain level of investment to get the data right in the right condition. And second, I mean, data strategy, data management strategy is not an end in itself. Understanding this, we make you to get the right approach, and I can guarantee you that this can easily contribute to 50% of the success. Why? The mistake we tend to make is to dissociate the strategy from the business itself. Yes, it's not a standalone strategy. The question would be, what are our business objectives? Once you define your business objectives, then you start thinking about the right data you need and under which conditions. So our business objectives should dictate the strategy that we need. It's okay to talk about, it's good to talk about data security, data quality, but these are the ingredients to make one pillar to sustain the business. So thirdly, a strong partnership between businesses and IT is very key, because having IT experts who know how to make sense out of the requirements would easily make them think how to fit their technicalities into the solution we need. So what did we take account before the development of the strategy is the alignment with international standards, because we are ensuring compliance with standards such as those under OECD Global Forum for exchange of information, including adopting a robust framework for data privacy, security, and interoperability to meet these international expectations. For example, security protocols, including access to automatic exchange of information unit, are quite unique and need to be incorporated in the new strategy. Second is the enhancement of data quality and integrity. And third is the centralized data management framework. And this is important because to improve data accessibility and usability, we are establishing a centralized governance framework. So this framework promotes standardized practices for data collection, storage, and analysis across departments. Something else important is to strengthen interagency collaboration. And also capacity building and awareness. Data governance is only as effective as people managing it. We are actually investing in training programs for our staff to ensure they have skills to understand what it requires to implement these good practices. And lastly, we are integrating advanced technologies, including data science and big data analytics to enhance decision-making processes. So this strategy is a vital step ensuring RRA keeps the momentum in the digital transformation and tax administration efficiency. Thank you.
Thank you, and perfect timing. I didn't even have time to ask you for the 1 minute. I really love your point about how the business objectives should drive strategy. I think everyone who's been involved in a large organization knows that, or have at some point in their life been involved with a strategy that maybe didn't actively kind of drive the business objectives. So this is a very good point, and also your point on human capital and the skills of staff, that is a vital element. So I'm turning now to Ghana. And Nana, you come from a background knowing the GRA, the Revenue Authority, and now you're in a position of as a consultant and advising the tax administration. I'm curious to hear some of your reflections around how Ghana has approached the key issues of data governance. Yeah, so I leave the floor to you for 5 minutes.
Thank you, and I think I'll use less than the 5. But for my time with the GRA, I was predominantly working with the exchange of information. And from my experience, I believe that Ghana's data governance framework was developed mostly in response to challenges and opportunities. So Ghana was GRA was one of the first countries to do exchange of information in Africa, both on request, automatic. They were a forerunner in a lot of that. And in implementing these international standards, a lot of the time, having a strong data governance framework became essential. Having good collaboration with other government agencies was essential to gathering the necessary data to exchange, to gathering the necessary data to use within the tax administration. And as a byproduct of that, you realize you needed to develop a governance framework for that. And because of that, it means that, and this is actually picking from the panelists that spoke before me, in a sense, his comments about business needs and strategy. It meant that, yes, the frameworks were being developed in response to business needs. But it also led to a very fragmented framework because you are answering particular problems or solutions in a silo kind of approach. You are looking at one aspect of it and not as institutionalized as it should be. And I think that's something that was referred to by our scene setter, that it should be institutionalized. It should be taken into consideration how it will spread across different aspects of the institution. And that was a significant challenge that, in my experience, I realized that the Ghana's or the GRA's data governance framework had. Going forward, though, I think it has given them a unique perspective in that now they are trying to have a more institutionalized framework. They are trying to have it across board. And learning from those experiences, they have a richer background to feed into their digital transformation journey now. And I think that is important, but it also highlights the need to have more standardized frameworks and have more regional integration when it comes to the development of some of these policies. And I think now, from my point of view as a consultant, having worked with other African jurisdictions, I see how increased collaboration, not just within a jurisdiction, but across jurisdictions on matters such as data governance would be beneficial and would reduce cost and maximize resources and ensure that a lot of jurisdictions are able to get further with a lot less. Thank you.
Thank you, Nana. Daisy, in her scene setting, she emphasized the issue of data ownership. And when you think about sort of the end of the journey of this transformation, it's in a fully optimized tax system where processes are very much digitalized, automated, where the taxpayer almost doesn't realize he's being taxed because everything is at withholding before they even receive the income. In this sort of dream case, a tax administration is almost fully dependent on data from others, either other government agencies and other third-party sources such as banks, employers, and even not even just in data collection, but also in actually in tax collection through collecting, withholding tax, etc. So I think when you imagine this sort of end of the transformation journey, it becomes very clear that the issue of data ownership is a very key consideration in this digitalization process. And so how can the tax administration ensure that they have access to the information that they need, that they can assess, control, and potentially audit the data quality? What are their tools for dealing with non-compliance from private sector, third-party data providers, for instance? I wanted to, again, sort of raise that issue of data ownership and hear some of the questions or decisions that KRA, starting with Kenya, has faced in terms of data ownership and also data quality. And also Kenya Revenue Authority has been setting up a corporate data office. So it would be great to hear about the process of setting this up and how it has changed your approach to data governance and data ownership. So a lot of questions there, and I'll yeah.
Yes, so I'll start with our journey towards setting up the corporate data office. So Initially, it was not the plan to set up a corporate data office. There was a need to clean the data and to migrate our data from the legacy platform to the iTax platform. So it was first a data cleansing project. And then I think three months down the line, we realized we cannot do this without having a governance, the data governance framework. So we then quickly moved back and went back to the drawing board and started by looking at a data governance framework. So we started with a data governance framework, but our major issue, the business need at that point was data quality. So after setting up the data governance office, we then moved to immediately establishing some of the critical data governance policies. So data protection policy, data migration policies, the architecture policies, data privacy, and third-party sharing frameworks with all these third parties that we were already engaging. And from the BI, the business intelligence aspect, the data stewards and business users have gone through to help them understand that. And we've also developed data cleansing business rules to guide on how we should ensure that the data quality is checked through the whole process. Thank you.
Turning to, thank you so much for that. Turning to Rwanda, I know that one of the key dilemmas that tax administrations face when in the process of digitalization is how do you establish the IT solutions that you need? Do you procure them off the shelf from commercial systems, or do you build your own systems? And I know, for instance, in the instance of Rwanda, you are opted to build your own systems to meet the needs of the exchange of information standards. But more broadly, how does RRA in the new data governance strategy approach this issue of data ownership and data control of your own data and software solutions? So.
Thank you, Peter. So without necessarily criticizing outsourced systems, in my point of view, if you can always develop your own solution or build your own house, it might take some time, but it always adds some value. So Rwandan's decision to build homegrown IT solution was driven by a number of factors, including cost effectiveness. As you know, any solution requires ongoing maintenance and the review due to unforeseen events or just business dynamics, so which are not necessarily covered by the contract or from the outsourced vendors. So the ability to not just slightly adjust the direction, but completely change the direction is also key. Because one day you might find that you made a mistake, then you want to go back on the drawing board. So it's very important if you have your own solution. Otherwise, you've defined the TORs, you have the contract. Sometimes it's not possible. And second, maximizing flexibility, agility, and innovation is also important because from experience, as I said, all starts by writing TORs, specifying the requirements. And it's not every time that you know all the specifications that you want to describe, you want to provide. And once you realize that there is a mistake, you can easily change it. So, thirdly, tailor-made customization to the Rwandan context is also important. A homegrown solution ensures that the system aligns to the Rwandan's law, to the compliance needs, and operational realities, more specifically bearing in mind that commercial entities operate varying systems. So, thirdly, the issue of data sovereignty. All vendors are, it's not every vendor who you can trust with your data. So sometimes you would need to develop your own just to protect your data. It's not every time for all systems possible because of the capabilities, but it is also important. Something else is capacity building. By building the system locally, we strengthen the skills of our IT professionals, fostering experience and creating long-term sustainability. There is also the scalability and the compatibility with the existing systems. That also is important, but more importantly, peer-to-peer support among African tax administrations requires us to develop our own solutions, because once we develop something, Kenya will not necessarily need to reinvent the wheel, and it's easy to share the experience and the best practices. They can even, get it from us, and we can get it from them. So that's also important. So in line with our data governance strategy, we emphasize the critical importance of data ownership and control through building our own solutions. Thank you.
Thank you so much. I'm getting hints from the organizers that they want me to speed up into the Q&A sessions, but I really want you to also get the chance to also share some of your insights on the data privacy. So I'm going to do a trick now, and then I'm going to ask you, Nana, to actually reflect a little bit on both those issues, both data ownership and data privacy from the Ghana experience, and then I'll move back to you on the data privacy. So, Nana.
Thank you. So I'll start with data ownership. I think Ghana has made some significant strides when it comes to owning third-party data or accessing third-party data. We introduced a number of laws that required third-party data. The e-levy, the communication service tax required us to integrate with third parties, ICT providers for their data and rely quite strongly on that data. It came with challenges, data quality challenges, for example, access challenges, because then you were fully reliant on them for the data and for your compliance measures as well. And the introduction of setting penalties, legal regimes to enforce quality standards and access standards really helped in that forefront, but it also emphasized the need to own a lot of the data. International collaborations also gave us access to data that we couldn't get locally. The automatic exchange of information gave financial account data and helped us enforce local regulations to get financial accounts data locally as well. So those are all significant successes and challenges when it comes to data ownership. When it comes to privacy, I must say that the GRA has benefited greatly for the fact that there's an or another government agency that takes the lead when it comes to data privacy, which is the Data Protection Agency, which is quite stringent and quite advanced when it comes to that. They had laws on data privacy, on management, processing, collection, quite ahead of some of the moves that the GRA made when it came to data collection. And this made it easy to streamline with that. But then it was also very targeted. It was general rules on data privacy, as opposed to specific rules on taxpayer data. And we know that taxpayer data usually has a higher standard of sensitivity. You're talking about financial data, residential data, personal data, and it's quite comprehensive. And then you had the international standards that the GRA had to meet when it comes to exchange of information, for example, which meant that they had to have more secure measures for collecting, managing, exchanging data. And they didn't want to be the weak link in an international framework where they were getting data from over 100 jurisdictions, and then a breach would occur from sub-Saharan African countries. So it was very, very important to put in some of these measures. And it was also quite time sensitive, which led to, for example, buying a ready-made software instead of building in-house. And a lot of lessons have been learned from that. And I guess in the wider scope of our discussion for this conference is the fact that countries like Ghana have made a lot of progress, but they've also had a lot of challenges. And it's important that we're able to revisit some of these things so that we can learn the lessons as we move forward to a more digitized tax administration. I've spoken very fast. I'm hoping I got all my points across and that I'm not keeping anybody from their meals. Thank you.
You're saving my time management, Nana. Thank you so much. So turning to Rwanda, can you please also reflect a bit? You've touched upon this already, but how data protection, data security has and the issue of privacy has been tackled at RRA, and also whether this is something which you see as, or how does taxpayers see this in terms of the building of trust for voluntary compliance, for instance?
Yeah, thank you, Peter. It's true that we also recognize the importance of maintaining that taxpayer trust, in ensuring that their information is kept properly, as it is outlined in the 2021 law on the protection of personal data and privacy. So in this journey, RRA achieved certification as both a data controller and processor, and this demonstrates our compliance with data protection regulations. And in 2021, we also obtained a ISO 27001 certification, which is internationally recognized, ensuring information assets are systematically protected from threats, and robust measures are in place to manage risks related to confidentiality, integrity, and the availability of information. And again, we are aligning with the global frameworks like the General Data Protection Regulation and the OECD Common Reporting Standards. Thank you.
Thank you. And lastly, before I open to the floor, Damakrin, Daisy, in her scene setting, she brought up an example from Kenya where she highlighted some risks involved with using AI and from a privacy or data protection or other issues as well. So I thought it would be fair to give you the chance to respond maybe to that concrete example and maybe more broadly how data privacy is being addressed by the KRA.
So I'll start with data privacy, and then I'll move to AI. Just like Ghana and RRA, in Kenya we do have a data protection commission. That's a third party that ensures that there's the data that every authority has is secured. However, with the third parties, again, when it comes to data privacy, and I'll not talk so much about what we're doing in terms of data protection, but I think it is critical for us to talk about the challenges that we're having with the data protection policies that are in the country. So internally, we have data protection policies. In the Tax Procedures Act, we have laws that mandate us and give us the authority to get access to whatever data set we'd like to have access to. But at the point of getting access, requesting for this data from third parties, the greatest challenge that we're realizing is from a tax administration perspective, there's a gap in the approach that we take, the strategy we're using to request for this data. So if we're trying to look at the compliance of a particular sector and we approach a mobile service provider for this data, we tend to want to ask for the whole data. So when we are doing the request, and I see Lutando shaking his head, it's nodding, when we are requesting for this data, we are not very strategic. So we then receive a backlash from our third parties. So it is not so much in the laws that are in place, but the strategies and the collaborations and how we are doing it. So if we are looking, I think if we change our approach and be more strategic when it comes to third-party data, then we will not have a challenge. There are laws in place that empower us to get this data. I'll move to AI before Peter raises his hand. Daisy, I get the risks that you're talking about, but I want to look at AI and machine learning as an enabler to tax administrations, majorly in helping us understand the taxpayer behavior, which will then help us enhance our profiling techniques for these taxpayers. And when it comes to the kind of services that we're giving, it is more specific and more tailor-made to a specific a group. So we could use AI in other aspects, but not necessarily in making decisions on compliance. I also want to give an example of what we're doing with the business data warehouse and business intelligence tool that we have. We are using it to risk profile our taxpayers, and we're bringing data from the customs, third parties, and domestic taxes. And when we're looking at the VAT return, if a taxpayer is filing a nil return, yet that we have VAT imports, then they're already flagged off. When we're talking about tax compliance certificates, we're now categorizing our taxpayers in 3 channels: the green channel, the red channel, and the orange channel. So once they've gone through a risk profiling using the business intelligence data warehouse tool, for those who are in the green channel, they automatically get the tax compliance certificate when they request for it. Those who are in the red then have a different approach. So I think, again, it goes back to being very strategic, having the risks in mind, again, when we are using AI and BI and machine learning tools. I think they do add value, but as Daisy, as you put it, it is definitely important to be a little cautious and then be strategic on the approach that we take. Thank you.
Okay, thank you very much to our panelists and our moderator. My take home is that what is your country needs? And in collaboration with that, what are the revenue authorities' business objectives? And then who do you benchmark from? And also understanding that whoever you're benchmarking from is also having a learning opportunity. We're going to have about 20 odd minutes worth of audience engagement with the panel before we head out to lunch. Please feel free to ask any questions or give your ideas. Thank you.
Thank you. Thank you for that insightful panel. And I think for me, I'm borrowing largely from the comments from the Deputy Commissioner General, RRA, that our business objectives must dictate our data governance structure. So for me, I think it means then, for tax administrations, what we are going to consider as our data governance structure is going to be very deliberate and unique to our own circumstances, taking into consideration probably maybe a level of use of technology and also the integrations that we have with third-party integrations, so that when we are considering the data that we need to acquire from various sources, then we need to probably balance it with our appetite or our propensity to consume this data, so that we don't have a situation where we are amassing a lot of data from various sources, but we don't have, for example, the human resources or even the capacity to consume it for revenue administration. So it would just be a comment, but I'd like maybe to hear your insights on that one from you. Thank you.
Yes, so as much as data exchange is important, sometimes the entities involved also have their internal regulations and laws. So this question actually goes to the official from Kenya. So when it comes to the banks, of course, the revenue authorities most often have the laws that permit or allow them to access information from the banks. That notwithstanding, the banks also have their internal regulations and laws. For instance, deposits of customers, information about customers, they have to be protected. And yet, our official from Kenya is saying that they were able to collaborate with the banks to get information from them. So may we know how they actually did it, because a lot of countries are struggling with this. They have their internal laws, the tax authorities also have their laws, and then there's always conflict as to whether to release or not to release data. So Kenya, how did you do that? If you can share your experience with us. Thank you very much.
So I think we can actually take some answers, and then we can move back to the audience for more questions. So I'll give everyone a chance to respond to the general comment, but Kenya, you had a very specific question there, so I'll let you start.
So I'll start with a brief comment on data governance. I like to say that before you establish the data governance, we need to have a data strategy in place. And the data strategy is the overarching. This data strategy helps you understand what do you want to do with your data and what do you want to achieve with it end to end. Once you have that data strategy in place, then you then look at data governance. So to achieve where we want to be, where are we when we're talking about data quality? Do we need to do a data maturity assessment? In terms of architecture, are we ready? But for me, what I would say the critical thing that we need to have in place before we start looking at the data governance frameworks is having in place a data strategy that clearly shows you how you are going to utilize the data that you have to enhance all your processes end to end. So I think that is very key. In response to your question on collaboration with banks, I'll start by saying that we first started by building a relationship with the banks. And it wasn't easy when we're rolling out the iTax platform to enhance the payment process, because initially the process was the taxpayer would come to us to get a payment slip, go make a payment, and then bring back the slip for capture. To simplify that process, we needed to integrate with all the banks. And so what we did, we got the first 2 banks that were interested in integrating with us through the payment gateway system. And then we went out and advertised and said, if you want to make payments, any taxes, these are the 2 banks that you need to run to. It was an interesting strategy because what that meant is that most taxpayers were now going to move from their banks to these 2 banks that were going to make their work easier. Now that then brought the other banks on board. But when it comes to debt enforcement, and when we want to get more information, detailed information about the taxpayers' banking details, we have laws that we have put in place when it comes to debt enforcement. So the tax KRA can then, if a taxpayer has been identified to have some fraudulent transactions or they have been flagged off for evasion, then we are mandated by law to get this data from the banks. But it is not all the data. And I repeat that we have to be very strategic. We cannot go to the bank and say, give us all the data for it. That is never going to happen. We'll never get that data. But when it comes to debt enforcement and addressing issues of tax evasion, we then have laws in place that makes us have access to the data that we need in regards to the particular taxpayers that we are referring to. Thank you.
Thank you. Moving on to Innocent.
Yeah, thank you. Mine was just a comment, but I cannot agree more with him because it also supports what Damakren was saying, because we got it wrong when we started because we wanted to get everything at the same time without even thinking about where we are heading to. So once we understood that was a mistake, then we went back, we say, actually, what is it for? where are we heading to? Which kind of data? Because every aspect of life can be translated into data. So is it that you need everything at the same time? Maybe some you need it this year, some other data you will need next year. So that's perfectly what I wanted to say. Thank you.
I think everything has already been said. Just to emphasize particularly American statements about the strategy leading to the governance. I'm a lawyer, and I think it's said that to everybody, to a person with a hammer, everything looks like a nail. And to a lawyer, everything looks like it can be solved with the law. You put a governance structure in place and you are good, you know. But there is such a thing as too much data. There is such a thing as not having a clear objective because you are swarmed with information. And if you rather start from the point of view where, okay, this is what I want to achieve, this is what I am doing currently, or these are my business needs, these are my objectives, these are the gaps. Before you build your governance structure, then you have more clarity, and then you can be more strategic and more targeted in how you go about these steps. So I think that's one of the key lessons, and that's one of the things, the recurrent themes that I am taking away from this panel, that everything should be strategic. Your data governance policy, framework, structure should be strategic, and that's one thing that African jurisdictions and African tax administrations should focus on going forward. Thank you.
Thank you for those excellent answers. And we have time for questions. I see Martin Hearson here. Yeah, so we have a few questions. We can take maybe 3 questions.
Okay, hi. Thanks very much for the really interesting remarks. Because several of you have mentioned the way in which your international obligations under exchange of information interface with your own national priorities and business needs. To what extent can we see those obligations, which are often more stringent than what you are then applying across the rest of the Revenue Authority? Can we see those as being something which is best treated as a part inside the secure perimeter? And to what extent are those a model to which you might aspire across the whole of your data governance structure? To what extent are they a constructive basis for which you could see managing all your data, or will they always be something which you do primarily because it is your obligation to your international partners?
And the Secretary World Bank, I have 2 sets of questions. The first is on data privacy. So can you talk a little bit about the pain points in the current data privacy regime? And if I were to reflect on some of those in my own experience, it could be around, for example, it's too expensive to protect taxpayer data, or we haven't identified the taxpayer data that is most crucial to protect, also called the crown jewels. It could be things around a requirement to minimize data collection, or it could be the difficulty of decommissioning data. So you're only supposed to have it a number of years, but we still love data, so we want to have it more years. It could be something I experienced with one of the countries that you represent, that even though we pseudonymized the data, was still being considered private, maybe more from a political perspective, and things had to go up to the cabinet to get approved. So that just limited our collaboration between the World Bank and that organization. So if you can talk about the pain points. The second thing is, how do we reinforce accountability for data quality within the organization? So who owns the data fields, and whose job is it to ensure the data is correct, and who will be thinking about this night and day, and it will be in his or her performance agreement, and there's a way to measure and follow up on that. Can you talk a little bit about those kind of experiences about making accountability for data quality come home? Thanks.
Thank you. I saw a hand in the back, but I'm not. We have time for one more, and then I'll turn to the panel. Okay, maybe I didn't see. Okay. Oh, here is a hand in the front.
Yeah, hi. To the panelists, for me, I've been looking at how our data governance framework, or to an extension, let's say strategy, plays out in our tax administration's corporate governance framework. I mean, because one should impact the other. I mean, ideally, the corporate governance framework or strategy should impact data governance framework or strategy, and vice versa. Especially from a KRA perspective, how have you maneuvered your way, right, into getting the impact that your data governance framework had to, that made the key changes, the key impacts that they had to have on the corporate governance structure? Because from our perspective, what you realize is that it has a key factor in the success of whatever it is you want to build from a data governance perspective. And more often, the failure to have it well aligned is some of the reasons why we end up doing siloed implementations along the line, and then there is no point where it sticks together and implementation becomes a bit difficult. How have you maneuvered your way around this? Thank you.
Thank you. So we have some very rich, three very good questions. Since we are now 9 minutes out from lunch, I will give you 3 minutes each to answer the questions and any closing remarks that you want to have. So to switch it up, I'll start with Nana and then come this way.
Okay, 3 minutes. So I'll start with Martin's question about the international standards. I think the international standards have been very useful in helping a lot of, particularly sub-Saharan African countries, progress when it comes to data management, data safeguards, and confidentiality. But now there is the potential for that to kind of hold them in place and prevent them from exploring, because at the end of the day, data is only as useful as you using it. Modules such as the secure perimeter for automatic exchange of information are very limiting for a tax administration. It's important that at any point in time, it's a phased plan, that there's a plan to expand beyond your secure perimeter, because you can't keep hoarding the data in one space and using it minimalistically. And any proper use of, or any effective use of data has to be organization-wide. And then you can find multiple uses for the data, not just in terms of collection, but for compliance, for targeting, basically. I'm trying to determine what level of taxpayer compliance is available for different, even for AI applications and machine learning applications. You should be able to use the data broadly, and you can't do that in a secure perimeter. So it's important that some balance is made between enforcing the international standards and ensuring that jurisdictions are able to phase out and explore that organizational-wide. Pain points for data privacy. I think all the points you mentioned are crucial, and all of them are present. The one that resonates most with me, again, comes to the decommissioning of data. And this comes because I recently had to do a bit of a benchmarking on prescription periods for audits and assessments. And it came across that a lot of jurisdictions have an infinite period for amending assessments when it comes to fraud. And if you have that, that means you basically mean you are keeping data forever. And the longer you keep data, the looser you are with how you are protecting it. You are more concerned with current data and making sure that's safe. But data from 20 years ago, you don't have the same archival standards that you would have for data in current use. So I think that's a significant pain point for privacy issues, and then also public trust issues. And this links to the earlier question from, I think, the representative from GRA about dealing with financial institutions. It becomes a concern if a tax administration is holding data for years, and it came from me as a financial institution. What's my liability, and at which point do I don't have any more liability for that data? And that's something that should be explored a little bit further to balance the fronts. I'm going to end here and then give my other panelists a chance.
Perfect. Thank you so much. Innocent?
On that one about international standards, we should be able to always confront obligations against the needs. If the obligations are not responding to your needs, there you have to be careful. That's what I wanted to add. And as far as the accountability is concerned, I think this depends on the role in the businesses, and the roles dictate the level of the accountability. As long as you know how to describe the specific roles and be able to track whether accountability is ensured. Thank you.
Who owns the data? I think that's a very, very critical question. Unfortunately, in most of our tax administrations, the domestic taxes department owns the register. But that should not be the case. It's supposed to be corporate. But it is the case because the registration process is hosted in business systems. The ideal would be to have a master data management within the tax administration where the registration process is handled from, and then the business systems feed from the master data management. That way it will also be easier to control the quality, issues of quality. But in the case we have now, the register is hosted in a domestic taxes system, and then the customs system has to feed from a business system. So again, we're introducing downtimes. So we need to have a rethink on our registration process. And once we have had that rethink and we have the master data management, then ideally the data should be owned by the corporate data office once we have put that in place. But as it is now, for most of our tax administrations, the taxpayer register is owned by the Commissioner for Domestic Taxes. I'll quickly move to the question on how the data strategy and the corporate strategic plan are linked to each other. The corporate strategic plan is the overarching for the authority. So once we then we have mapped out our strategic plan, from there then we can then narrow down and build our data strategy from the corporate strategic plan. So they do feed each other, and the ICT, I talked about the ICT strategic plan. It really caters for the pillar on data architecture and integration, and as well as BI. So the ICT strategic plan and the data strategy feed from the corporate strategic plan, but that should be the overarching plan, and then these others feed from it and then show how we want to achieve what we have put in that strategic plan, how we want to achieve it from, in most cases, I think it's 3 years or 5 years. So we set out the plans for 3 years or 5 years, depending on how your corporate plan is structured. The pain points for data privacy, I think a major point is at the point of collection and validating that data at that point of collection. Because whatever the taxpayer provides as the contact details, that means that if I provide a particular email address or a particular mobile number, if that is not validated, maybe through a one-time password, that means anyone can have access to my data if we did not validate the information that was provided initially. The other area where I see a gap is in audits. When it comes to audits, a lot of information is exposed. So I think at this point, tax administrations need to consider computer audit techniques just to enhance that privacy aspect and who has access to this data during audits. But those are the key pain points that I see when it comes to data privacy. Thank you.
Thank you. So it's 1 o'clock. I want to once again thank Nana, Innocent, Damakrin for making this an incredibly rich and conversation with a lot of deep knowledge. So I think we have a lot to talk about over lunch. I will now leave it to the Master of Ceremonies to give us the details.
Thank you very much, Peter, and thank you for our panelists. Also, thank you to everyone who had questions to ask and ideas to impart. I think on that last point, actually, if we keep thinking on audits in terms of using computer techniques, I think that might actually help us to think more on randomized audits, because most of our audits are based on risk. And I think it will help us to reach a bigger sample of the taxpayer pool. Time has arrived now for the fun. Well, there's even more fun later, but this is the, the beginner. We are about to head out to lunch. Lunch is given, it's going to be downstairs. There's a marquee downstairs. The ushers will show you where you go. It's down the stairs and then through a hallway, and then there's a marquee that you're going to see. It's like a tent type of thing, all white. That's where we're having lunch. And it should be for 1 hour, okay? And then we can reconvene and continue with our conference. Thank you very much. This afternoon's conversation. If we can be seated so that we can get started, please. Hope you enjoyed lunch, and I hope you got a chance to do some networking and get to know some people. J'espère que vous avez eu la chance de parler avec les autres gens, de vous connaître, kumenyana, no kuganira n'ibindi. This afternoon's session is titled Digital Inclusion, Improving Access and Usage of Digital Tools. A nice way to start off from where we left off. And indeed, more digitalization will actually help us to include more of the working first and even what we call the informal section, really. This session will propose a policy-oriented discussion on the current patterns of and issues with awareness, adoption, and usage of taxpayer digital services, such as e-filing and electronic fiscal devices, i.e. like our EBM. It will also discuss the best strategies governments can follow to spur taxpayers' universal adoption of digital services, which is a key requisite for successful implementation of a digital reform. Our scene setter is going to be Caroline Kenne, who is the digital cluster lead from the Institute of Development Studies, or IDS. And she is going to be team tagging with 3 panelists and 1 moderator. Our panelists are going to be Chanai Mukumba, Executive Director from the Tax Justice Network of Africa, Oswell Kahonde, Head of Anglophone Africa from the United Nations Capital Development Fund, Better Than Cash Alliance, and Edward Groening, Head of Research and Planning from Eswatini Revenue Services. The moderator will be Tuive Siwale, Head of Tax for Growth from International Growth Center. Ms. Caroline Kenne, please, if you can come and set the scene. And the panelists, you're welcome to take a seat on the podium. Thank you.
Good afternoon, everyone. I hope you now feel full, but are still wide awake. My name is Caroline Kene. I am the Digital Cluster Lead at the Institute of Development Studies. So I'm also a research fellow there, and we do a lot of research around the digitalization of public services and other forms of digitalization in the humanitarian sector. So this morning we had a very interesting panel discussions. I was quite inspired and encouraged with some of the progress that government is making. And what I want to do, I think what we are aiming for, I think, in this panel is to look at the citizen side of things. Because it's very important that even if we have the progress with government in terms of digitalization, are citizens able to engage with these new changes? So I will start off by kind of explaining how digital shapes government. And I think it's important to actually categorize those clearly to identify how government engages with citizens. Following from that, I'll talk about the trends and the different approaches to delivering digital government services, and you'll be familiar with some of these as we discussed in the morning. Then I'll look at technology as an amplifier of existing inequalities, mostly to try and identify what are the areas that we need to look at when we look at inclusion, and then some considerations ahead, some of what has already actually been mentioned before, which is encouraging. All right, so in my digital cluster, my colleagues did some research for the Swiss Development Corporation, looking at key issues in digitalization and governance. And there are four key, oh, sorry, this is not actually. And there are four key areas when we look at digitalization in government. The first one being digital in government, which is traditionally what you'd have government start with, where you digitalize departments and you're able to carry out various transactions internally or sometimes between different departments. But then now government wants to kind of connect with citizens, as we've seen with tax earlier, where we have digital government with government to citizen engagement. But we also have digital participation in governance. And we need to ask ourselves, have spaces been provided for citizens to engage with government on their experiences of accessing public services? And this also includes civil society. I think we'll hear from our panel later. And then finally, a very important aspect is governance in a digital world. What impact have monopolies had in actually influencing the lives of citizens and government? So it's important to actually make sure that government prepares for this and actually designs the various frameworks and policies around protecting their data as well as their systems. So just telling the story about why digitalization is happening the way it has been happening, and our field of information systems started to sort of like theorize around it, but it's pretty much what we see in practice. So I talked about digital in government, which is very much decentralized services, department-wide data integration, and an attempt. People are still filling in forms, right, to provide the same kind of information. Someone talked about when you register for tax, there's the TIN identification aspect, but also there's a national ID. So you see registration happening at different places. So it's quite, it can be quite duplicated. But now what we're seeing globally is that governments are trying to move to more of a centralized one-stop shop where a variety of public services are provided to citizens in one place. There's that partial department-wide and government-wide data integration and attempt at that. And I could say a lot of governments are at this stage at the moment. People are starting to fill out less forms and provide pieces of information only once. But what are we ultimately aiming for in phase 3 is what, well, oh gosh. It's so difficult because I'm actually, I apologize, I'm actually looking at 2 different screens at the moment. So for phase 3, when you're looking at no-stop shops, here it's where government actually initiates processes, using a very proactive and predictive approach to provide services to citizens. So for example, if we elaborate on that a bit more, we look at 3 important categories. The collection of data from citizens, no forms are required when we're looking at a no-stop shop, very much reliant on digital IDs, which is the direction that many governments are going for. We also have the integration of data storage, government-wide integration, and digital identity. And then finally, the purpose of data use, very much proactive and predictive purposes. So here, instead of the citizen going to request the service, government actually suggests the service and initiates services for citizens. So for example, when you are needing to apply for a driver's license before it expires, then government would have sent you a letter or an email way before that happens. Okay. Now, it's quite good that, fine, governments are digitalizing. I'm information systems discipline, so I am pro-digitalization, but I'm also pro-digitalization done in the right way. And you could say governments have made progress in different parts of the world, different stages. You can see Africa is actually making quite a lot of progress. So Africa dominating, and a lot of the countries in East Africa are actually moving forward. This e-government development index, however, looks at 3 key things. So it's not only about government providing those online services, it's also about the telecommunications infrastructure. How developed is it? What progress has been made in that sense when we are looking at access for citizens in remote areas? And then the human capital index looks at the ability of citizens being able to engage with those new digitalized systems. So in kind of like wrapping it together, there are 3 key things that need to be considered when you're looking at digital inclusion for pretty much any digital development project. So there is, apologies. So there's differential access, differential capacity, and differential motivation. Now, these different factors actually play out differently depending on whether you're looking at the government-facing side of things or the citizen-facing side of things, because they interplay to kind of determine how you deliver an initiative. So I'm not going to talk about each and every one of them, but if you look at this diagram, it sort of summarizes some of the things we have talked about earlier in the morning, pretty much categorizing those 3 key issues that we look at when we're digitalizing. Access, I've talked about technology, but someone talked about data access. How are you going to digitalize if you have data silos and fragmentation that is actually existing in various departments? What is the state of data? What is the quality of data? The inconsistencies in data exchange. When you go about implementing any digital development project, you always have to make sure you do a feasibility assessment to see where you stand before you rush into things. And then when you're looking at capacity, someone mentioned cybersecurity being a major aspect, digital literacy among citizens, but also administrative literacy in terms of citizens being able to understand what they need to do when they get onto a system. Do they know how to file tax returns? And so on. Other issues also include when you actually employ a particular company to implement a digital intervention for you, how much say do you have in it? Is there vendor lock-in? Is there a lack of contextualization and self-determination? So it was really encouraging to hear the examples that I was seeing from Kenya and Rwanda earlier. And then finally, the motivation. Is there incentive to actually use these applications? The informal sector, are they willing to engage with the new kind of systems that are available? Okay, so DPI will come up soon as we talk about it a bit more in the next session on digital public infrastructure, how it's divided into digital ID, digital payments, and data exchange. But I want you to just remember some of those questions you need to be asking under each of those different components of digital public infrastructure when it comes to engaging with citizens. Okay. So I'm going to end it over here where I'm just kind of highlighting some of the common aspects that have been identified at the last G20 Summit on Digital Government Recommendations, looking at common principles of data justice and interoperability and openness. How mature is your data governance before you actually go about implementing these technologies? Is there a North and South mutual learning approach to implementing these technologies? Is there participatory governance and co-design? And finally, are we including citizens when we're actually designing these new systems? I'll end it there. Thank you very much.
Hello. Okay, great. Thank you, Caroline, for that insightful presentation. I'm going to be moderating this next session, and I'll be taking you through the panel discussion on, which is titled Digital Inclusion, Improving Access and Usage of Digital Tools. And we'll really be bouncing off a lot of what Caroline presented to you just a few minutes ago. I was very excited when I got the panel immediately after lunch because I knew everybody would be well-fed, happy, eager to engage. I know I'm going to have so many questions that we're going to get through it all. So yeah, very excited that we'll be having this panel together. And as I was just reflecting before the panel, I think the executive director of ICTD said something very interesting earlier. She said that this conference was bringing together a slightly different set of people, and she encouraged us to be open in terms of learning. We have tax people, we have people on information systems, people working a lot on digitization or areas that we might not traditionally work on. And I found that to be the case, especially for this session, because I actually learned a lot about digital public infrastructure coming from a more tax-focused background. So I hope that even as we go through this session, you'll also be stretched in that way. Now, I've already introduced the title of the session, and as Caroline alluded to in her presentation, she said, we've been talking a lot about the tax administration side of things. We've been talking about how you set up a system. We've been talking about the impressive rollout of these systems. In this session, it's the first time where we're taking a hard look at citizens and participation and looking at issues of how do we include people, how do we improve access, and how do we ensure that these tools are actually being used. And to help me discuss this and help us have a very rich conversation, I have three panelists who I will introduce in turn. And slightly different from the other sessions, we're going to sort of focus on one big issue, and then we'll come around a second time for follow-up questions. So I'm going to turn to Edward, who works for the Eswatini Revenue Service. Edward, it was so fascinating to see the scale and the scope of digital public infrastructure rollout that has been discussed throughout the conference, and Caroline has sort of taken us through some of the issues that a government goes through as they're thinking of rolling out a DPI. I wanted to find out from you, as a tax administration, you tend to have a very strong focus on revenue collection. How do you ensure that there's equity and inclusivity in the use of digital tools?
Thank you, Twive, and thanks to Caroline as well for the great presentation, and good afternoon to all of us. Yes, it's true. Us as revenue administrators, our goal is to raise revenue. That's why we exist, and our interest is always the money. In that light, therefore, every time we think of technology, we are thinking, how do we better use this technology to get more money, maximize our own efficiencies internally? But what this does, it happens at the expense of inclusion and equity on the side of the taxpayer. Because from the point we come from is we want to raise revenue, and we tend to enforce these which we want to do. And already we have the law backing us up. Even some of the technology, we have the law helping us to actually do this enforcement. But this tends sometimes to lead us to a situation where one taxpayer is better off, the burden is lighter when you introduce this technology. But with another taxpayer, the same technology is increasing the burden and the cost. And therefore, that's where the issues of equity and inclusion come in, where several taxpayers are struggling to enter there, or the cost of being there become quite high for them. But in terms of now, let's think about how we improve this inclusion and equity. The first point I would like to bring up is we should start as revenue administrators, which is what we are doing at the moment, to implement technology as a remover of bottlenecks or barriers. So that's how we have started considering technology. We don't need technology to help us enforce the law, because that is on our side already. But now we need to think about how we facilitate and make things, enable things for the taxpayer so that it's easier for them. And in this way, it will ensure that these technologies are actually better used. And now also, as we use this technology, we should think about how we are bringing efficient, better service to the client, rather than how do we get more money out of them. And then what I want to bring up here is that digitalization in itself, by digitalizing our processes, it has given us much data, much attributes and knowledge about our clients. And it is time now we start using that very data to build solutions that are differentiated, that are cluster specific, that look at the different categories of the taxpayers. So we should exactly use this data to make things easier. And we must consider, of course, the different characteristics, like I said, and the issues of capacity, digital literacy, and of course, the different appetite for the different groups to use the technology, because they differ in how they need and want to use that technology for. For example, a large entity, you introduce automation and digitalization, they are very happy, but the smaller one on the other side is frustrated because maybe there are 50 transactions and you're introducing a solution that covers 5,000 transactions, and for them, it doesn't really work well. And also what I want to bring in here is how this design should take into account issues of informality that they talked about. I learned recently that with the informal sector, the best way to get there is to sit down and be like them and talk like them and be within them. That's the only way to understand and work better with them. Therefore, in designing these technologies, you have to be careful about how you come up with them. And in the informal sector, that's just one of the ways you can do it. And of course, here, the data, if it's a whole of a government approach, which we talk about digital IDs and all that, it helps us to be even better because the data you have now has more coverage and interconnectivity within it. Then you design better solutions in that. And also, we talk about cost here, which is another barrier in terms of equity and marginal groups. It essentially means that us as administrators and governments, to try and iron out or level the ground, you might have to invest in that infrastructure that will help level the ground. For this marginalized ones, invest more in the infrastructure and education and digital literacy. That will really, really help in ensuring that there's acceptability and access across. But another one, as I'm about to conclude, is the issue of co-creation. Now we need to start thinking about designing solutions with rather than designing solutions to, because we tend to design solutions to achieve something, but now we need to think about how do you design solutions with our clients, with our taxpayers, so that these solutions are really serving them and easing their burdens. Of course, this will definitely then take into account where they are in an easy way. And in this sense also, I want to talk about how we should look at digitalization and use of technology from our own strengths. I recently stumbled upon a research that said the use of internet and social media is not the highest in Africa. Let me say Africa is amongst the lowest. But the surprising finding was when it comes to mobile technology and use of mobile devices, Africa is up there, and there's no other continent that compares to Africa with regards to that. What that means, therefore, if we come from our strengths and what's around us and what's easily accessible and usable to our clients, it is easier to design relevant, accessible, and inclusive solutions. That's an example, of course. Mobile money is the biggest one, which is an example in this regard. So, in short, what I'm saying, these designs of our policies and digital solutions should really take into account that we must have differentiated solutions. If you are doing EBM or whatever technology, think about it, different clusters, and think about differentiated solutions for the different groups, and think about designing for the client, not designing to make the client do something. And this is where the whole of a government approach really becomes useful because it supports the whole initiative. Those are my remarks for now. Thank you very much.
Thank you so much, Edward. That's so helpful. I really like this point around creating tools, co-creating tools with the users in mind, as well as earlier on you talked about the removal of barriers to access and how important that is, and also use of data. I'm now going to turn to Chennai, who is the Executive Director of the Tax Justice Network Africa. And it's exciting to have someone from civil society who serves as a voice for citizens who may not necessarily have access to the corridors of power. And so I'm going to turn to Chennai, and I sort of have two related questions for her. In your experience, how inclusive is this digital public infrastructure technology, especially in relation to taxation? And does it in any way amplify existing inequalities? Have you come across any examples where this has become a problem?
Great, thank you so much, Tuivwe. First of all, appreciation, I think, for the invitation to speak today. It's always a pleasure to speak at ICTD conferences. I think in response to the question that you've just given me, there's a lot that actually has been said by Caroline, I think, in the scene setting that she did. And I think actually Edward started to touch on quite a few points that we consider quite salient, actually, as TGNA, when thinking about the role of tax, the role of technology, and the way in which they can either contribute to or potentially help address issues of inequality. So I think in terms of an overarching response to this question, what I would say is that technology has an incredibly high potential to be transformative in terms of how it can begin to address issues of inequality that we have within our society. However, in order to actually do this effectively and efficiently, it's important that there is a sense of proactiveness in trying to address these issues of inequality. Because if you aren't proactive in trying to address these issues, what we've actually seen is that at times you actually have this technology reinforcing and at times exacerbating some of the social and economic divides that we have within our different societies. So to give a few examples, one of the first things that can be attributed to technology is the way in which it can improve accessibility. So we've seen DPI systems such as digital IDs, e-filing platforms, as well as mobile tax payment options extend access to various tax administration services. And we've seen this happen in a number of different countries in terms of extending access particularly to marginalized groups, including rural populations, as well as the informal sector. However, it's important to note that unless you are proactive in addressing some of the challenges that inhibit this access, it can actually further increase the inequality that we see between these groups. So earlier, for example, we heard, I think it was a question that was asked about what do we do, for example, about the limited digital literacy that we have in some of our countries? Or how do we address, for example, issues pertaining to poor internet connectivity? And often you tend to find these particular situations prevalent within rural economies, within informal sectors. And so unless there is an intentionality behind addressing those issues, you can actually see technology further exacerbate. One of the other things that can be attributed to DPI technology is in the way in which it can address the affordability question. One of the things we've seen is that DPI can lower the cost of tax compliance by streamlining procedures, by eliminating intermediaries, for example, as well as at times actually offering free-to-use digital services. But when thinking about that, it's also important to take into account some of the hidden costs, right, that come with DPI. So, for example, in order to access it, you need to have smartphones, or you need to have either engaged or undergone some sort of training at times in order to access some of the digital platforms that are available. And unless there is an intentionality, again, as I alluded to earlier, we can see further inequality being put in place. Another point that we see that comes from DPI is the way in which it can actually enhance the inclusivity question. So we've seen situations where DPI can reduce biases in tax administration by automating certain processes. One of the effects we see is increased equitable treatment, particularly for taxpayers. DPI can also help in targeting underserved demographics, particularly through data-driven approaches. But one of the things we need to be thoughtful about in order to ensure that we actually are addressing this issue of inclusivity is by taking a look at some of the algorithms, right, that are at place. If they are not carefully designed, it's actually been shown that we can actually see biases in existing data, further perpetuating some of this inequality. And at times, what we've seen as an approach to try and be more inclusive tends to be a system that unintentionally, unfairly targets, for example, certain demographics. And again, going back to the point that I've made, because we're not being as intentional about addressing some of these issues, actually see it further exacerbate these issues of inequality. So with regards to the second question, which is, does it in any way amplify some of these existing inequalities? I would say there are definitely a number of existing inequalities that we can see further amplified, again, unless we are being intentional about addressing them. So the first is the question on the digital divide, right? So already this is an issue that is quite prevalent across the continent. Going back to those 3 points I'd raised earlier about digital devices, internet connectivity, and digital literacy. Without making sure that we have access, particularly to lower income areas, marginalized groups, of these particular resources, we can see an amplification of particularly that digital divide issue that we see prevalent. Another existing issue, another existing inequality that could also be perpetuated is that of gender inequality. Women, particularly in low income and in very patriarchal societies, often have less access to technology. And also tend to have a lot lower digital literacy than men. So unintentionally, we can see DPI systems favor men and again further exacerbate this gender inequality that we often see within many of our societies. I think the third existing inequality that can also potentially be amplified is one of a lack of localization. So often we find that at times DPI systems don't fully account for linguistic or cultural or regional diversities that exist within a society. And what this means is that they make them inaccessible to non-dominant language speakers or culturally distinct groups. And so it's important, again, when thinking about how to ensure that we're putting in place DPI systems, we're thinking about often those groups that aren't dominant, that aren't mainstream, and what it means for their accessibility to the services that are being offered. So I think for me, to go back to the point I'd made earlier, there is incredible potential when thinking about technology. There's incredible potential to increase accessibility, to increase affordability, even to help address some of these already existing systemic issues that we see, for example, with gender equality. But in order to fully achieve that potential, there needs to be a thoughtfulness on the part of implementers, such as our revenue authorities, to make sure that we're not unintentionally harming the very same people that we're trying to serve. I'll conclude there.
Thanks, Chennai. That was really, really, really excellent. I like the point of unintended consequences and just sort of trying to think through those. And yeah, thanks for sort of outlining in very specific terms some of the inequalities that can be exacerbated by using these types of technologies. I'm now going to turn to our third panelist, who is Oswald, who's coming to us from CDF, I hope that's correct, from the Better Than Cash Alliance. I like that. I like the title of the organization, Better Than Cash. It's very straightforward. You know exactly what they do. And the question that I'm going to ask him is kind of related to something that Chennai mentioned, and is sort of something which we also know to be true in terms of the local context, which is, Oswald, how do we tackle the challenge of cash dependency as we switch to more digital forms? How does this particularly impact low-income groups who tend to rely more on cash?
Thank you so much. I hope you can hear me well. And good afternoon, everyone. A good question that you're asking. I think the beauty about us as Better Than Cash Alliance is that I'm speaking from a non-tax perspective. So we are not tax people, and we are more focused on digital payments as part of the DPI triangle, if you want to call it that way. And from what my colleagues have been saying here around the issues around inclusion and the question that has been asked about cash dependence and exclusion of the low-income people, I think the question that comes into my mind when I was thinking about this question is, I'm talking to tax authorities and tax administrators. And when you talk about inclusion, what are we trying to achieve? Are we trying to get more people to pay tax? Or are we trying to increase which is the same thing, the revenue base? And then on the other hand, from my experience and working with most people, they try to run away from digitization of payments because they don't want to pay tax. So how do you then strike a balance between those two? And now, Prive is asking a question around how do we ensure that people are included? Then I'm kind of in a dilemma here to say, okay, should we encourage inclusion for tax purposes, or should we encourage inclusion for development purposes? And I think from the UN side, we lean more on the development side. If you guys then come in and tax people, that's you. But for us, we are more focused on development. But going back to the question, I think the moment you say cash dependent, we also want to find out why are people so cash dependent. And when we are talking about digital payments, we're talking about all these DPI and all these things, financial inclusion, digital financial inclusion, and so forth. And you also go on to say the low-income people rely on cash. Why is cash a king? And why is it more preferable? Or why is cash queen? Queen, yeah. That's what others say. Why is it more preferable? I think it is preferable because it's convenient and it's trusted, and people prefer using it because they've been using it over and over again. And according to many people, it doesn't come with a cost around it. I'm putting it in quotes here because there is always a cost of cash. The challenge, of course, of exclusion comes from some of the issues raised by my colleagues here. Infrastructure issues are a big challenge that need to be addressed. The other thing is basic policy issues. I think this is one of the things that we're battling with on the continent in Africa, to work with governments to be intentional in terms of developing policies and strategies that are DPI linked, but also inclusive. So the most important thing then is to say, if the policy is intentional and if the policy is addressing some of these barriers, once you deal with that level of policy alignment and policy intentionality, the next thing is the development of the infrastructure that then brings in people into the fray. And when we talk of infrastructure from a digital payments perspective, we are looking at, especially in Africa here where mobile money is more prevalent, we are looking at the coverage, network coverage that should go to almost all parts of the country. That's more straightforward, and a lot of governments have been investing largely in that. But there's another type of infrastructure which we call access infrastructure, which has been the missing piece in the whole process of digitization of financial services. And access infrastructure, we are saying, if you send money to my mobile wallet, for example, do I have access to that money? It's there in my phone, but do I have access to it? Can I use it? And so it's important then to start developing that access infrastructure right in the rural areas to ensure that we don't leave people out. The other thing that would help to drive inclusion from our experience is to make sure that digital is better than cash. And this is where our name comes from. As long as digital is not better than cash, then don't go digital. Only when it is better than cash. And When it's better than cash, we're saying, I can use my money digitally without cashing it out in the comfort of my home. I can pay my taxes in the comfort of my home, wherever I am. That's when we call it is better than cash. But as long as there's still a cost to it, I still have to walk 5 kilometers to the next agent to cash out or to file my returns or to do any transaction that I want to do, then it's not better than cash. Rather, stick to cash because it's not helping anyone. The other component that we have always found to be very useful is not to reinvent the wheel, but to modernize what is already working. I think there's something that was said earlier on around co-creation. I think it's Edward who mentioned that. So it's important to do co-creation, to adopt a co-creation approach when we are digitizing. If you look into our traditional systems in the rural areas, or especially I'm talking of Africa here, in the rural areas, you realize that there's so many financial systems that are already operating in the rural areas. They are called informal by the academics here, but they've been working and tried and tested. We talk of the Village Savings and Loans Association. We talk of, I don't know what others call them, the Roscas. Some call them rounds, where people give money to each other and so forth. Those are at the community level, and those are tried and tested. And one of the things that we have seen working is to get started from that position where you start digitizing those systems and then integrate them into the formal system. It becomes easy because it's not bringing in a shock to the system. One of the things that we always talk about is disruption should not shock the system. It should enhance the system to be much better. So I think for us to ensure that there's inclusion and there's no one left behind, like we say in the UN, it's important to address all these components holistically without leaving others out. I can stop here.
Thank you so much, Oswald. Those are such important points that you raise. I'm just going to quickly swing back to Chennai. Some of the things that Oswald highlighted sort of speak to the issue of trust, and I'd just like to hear your thoughts, having worked a lot closely with citizens. How do you build trust between government and citizens in order to help address some of these inequalities?
Thanks, Twivu, and you're absolutely right. I think Edward made mention of one of the ways that's important to do so. There's of course, a number of different methods that governments can do so, but I would say that the most important one is to foster citizen participation. And so this looks like including citizens, the very same people that you're hoping will benefit from this technology, in both the design, the implementation, and the governance of the public systems, right? So this can be done using, for example, public consultations or workshops or participatory spaces. And I think we found that to be quite effective. What this demonstrates, particularly to the citizens, is that the government values the citizens, that the government values the voice and opinions of the citizens, and then also creates a sense of shared ownership, right? Once we actually have the final outcome or the final system in place. The other thing that I would say is also important in order to build trust is by ensuring that there is transparency. And this looks like clearly communicating to citizens, to taxpayers, how the system works and how the data is going to be used and what the actual benefits of this particular system is going to look like. Making sure that all information that is related to and can be made public is actually made public and accessible. What this does is that it reduces fear on the part of citizens of a potential misuse or bias, right? As well as demonstrates a certain level of accountability, which is really important when, of course, trying to build this trust. I would say the third thing that is important would be to ensure that even in the development of this, there is, going back to my earlier point, an intentionality behind promoting inclusivity and equity, right, when developing this system, these systems. And so when, for example, in the design phase, it's important to always keep in mind the access, particularly that marginalized groups are going to have, particularly those that, as I'd mentioned earlier, have limited digital literacy, have disabilities or, for example, have economic challenges, as well as making sure that insofar as it's possible, this system is also available in various languages, etc. What this does is that it does as much as it can to make sure that no one is left behind, right, in the implementation, and then also shows a commitment on the part of the government to make sure that it's serving all of its citizens as much as it can.
Thank you. Edward, this is probably your final question before we turn to the audience. Chennai kind of talked about accountability, and just also drawing from something that Caroline mentioned in her presentation, one of the challenges we face when we are expanding digital systems is resistance within the system. So for instance, in the Revenue Authority, sometimes there's certain benefits that the people within get from face-to-face interactions, and you kind of get, you also have this issue of we've always done it this way, why should we move to this new system? In your view, how can we, are these things real? And what can we do to sort of tackle them so that we ensure that we don't find that the tools that we're trying to create are defeated from within?
Thanks again, Tiva. Yes, very true. Those factors are very true. And I also just want to bring in what has been shown over the years. The failure or success of many IT projects is on people. So what usually happens and what usually is lacking is the appropriate change management, engagement, and moving together with your stakeholders. Hence why I brought in that issue of let's co-design, let's test it together so that we move together. So, and it, like you said, it's not just outside, it starts from the staff. I'm going to lose my job. There are so many fears around, or it's never gonna work, we tried this before. But it is the continuous collaboration and engagement. And hence why I would really say, yes, technology is there, but what I would emphasize on, when it comes to the service-related part, humans still want the human touch. So you need to try and make sure on the service side, you have the human one way or the other showing up. And not just the human showing up, you also understand that the digitalization itself requires collaboration between us as stakeholders. It's not just machines and numbers moving around. It requires us to talk to each other, collaborate, and communicate. So in short, we cannot leave out issues around education, engagement, and collaboration as we introduce these technologies. Thank you.
All right, thank you. I'm now going to open it up to our audience for questions. I think I can take a round of 3 questions at a time, and then we'll come back for a second round. I think there'll be mics roving around, so you can just raise up your hand and we'll be able to turn to you.
Hi, Fabrizio Santoro from ICTD. Thanks for this discussion. I wanted the panelists to elaborate a bit more on the specific policy, which is that of mandating the usage of tax digital services. There's something is happening in many African countries, especially during the pandemic. There is a study we've been doing in Eswatini where, from a specific point in time during the pandemic, the electronic filing was the only option first, and then electronic payments a few months later. It's a nice, I think, case study of encouraging digitalization. I would love probably Edward to elaborate a bit more on that. Thank you.
Anders Eckerskov, World Bank. A question I was asking myself whether the inclusion moniker is the right thing to bring to the tax world. Oswald, you brought that up, inclusion comes from the service delivery, right? It doesn't come from, we're going to take your money kind of perspective, right? The tax authority probably is very much in favor of everybody, registering, filing, and paying taxes regardless of gender, ethnicity, and age, and so on. So what are the issues one could push having that general view? And I want your views on that. I was on a panel with Jay Rosengart from Harvard, and he said one of the issues he saw is that tax administrations have data on ordinary citizens, like normal wage earner, whereas high net worth individuals, very difficult. And if you were to get detailed banking information about transfers in and out of the country, you might find political resistance. And that would not be an inclusive agenda, but rather than an equity agenda. If you only have data to go after the common man, that could be an issue, right? So maybe we need to rephrase this a little bit. Another issue that potentially could come in is when the tax authority was being used to send money out to citizens, right? So how do you can talk about an inclusion issue, but it's a little bit out of the norm. And then the third point is, wouldn't on the balance, and I do recognize the issues around access and usability of these websites, digital tax administrations be more of a level setter for everybody, because I cannot show up and bribe or use my connections and so on, whereas I'm pretty anonymous working through the digital websites and so on. So shouldn't we, understanding limitations, really push for digital as a way to kind of put everybody at the same level? Thanks.
Yeah, so Edward talked about collaborations in terms of digitalization. And I also see that as extremely important, because without it, it will be difficult. But I wanted to find out from Edward, maybe in your country context or Africa, what has actually been the hindrances when it comes to collaboration with respect to digitalization? Thank you.
Thank you for that first set of questions. I think I'll give our panelists a chance to respond. Edward, I think there are a couple of questions for you. There's the issue of, but I think this is not only applicable to Edward. I think I'd also like to hear Oswell and Chenai's comments on this issue of mandating the use of digital technology or the approach of having just a blanket mandate. This is the date you're supposed to do it. We expect it to be in at this date, and there are no alternatives. What are the experiences on the ground, and what are your thoughts about that? And then there were questions around how we should really think about inclusion. And Chenai, I think this one I'll give it to you, especially the issue of we've kind of focused on the bottom half of the income distribution. What about the top half of the income distribution? How do we ensure that those people are included? And the question I'll give to Oswell is the one on digital as a leveler of it makes everybody the same due to the anonymity factor. Is this the key that you're talking about, which would make digital better than cash? Or what are your thoughts around that? And then the final question, I think, was directly addressed to Edward, and I'll let him tackle some of the issues around collaboration and how to take that forward. So any of you can start if you're ready.
Yeah, I'm happy to start. So I think the question on inclusivity is a really good one, and I think it's a good one because there's different ways you can think about inclusivity, right? And so specific to this panel, I think the conversation was really around how can we make sure that as we are putting in place digital systems, we can ensure that we're not leaving certain groups behind, right? And so my response was, to kind of speak to, the ways in which that can be done, particularly if you're not being intentional about including those groups. But to your point, the question about inclusion should also be about how can we make sure that particularly high net worth individuals or multinational corporations, et cetera, are also being fully included within tax conversations, within tax systems. And I think this is an incredibly important conversation. And I think from a revenue generating perspective, probably more important than the question about the bottom half. But I think particularly from from the broader conversation, these different dimensions of inclusivity are worth having a conversation about. But absolutely, I think the way in which we are using technology to prevent wealthy people from shifting their taxes, multinational corporations from engaging in tax avoidance, evasion, all of that, that's an incredibly important conversation that needs to be had. And like I said, also probably would be the biggest contributor to raising resources. I think the other question I would speak to, yes, I think also when thinking about inclusion, it absolutely is also I think your words were level setter. Because you are using technology to engage with different individuals, you're less likely to see bias. And I mentioned that, this is one of the advantages of technology. But I also mentioned that even with that, we need to be thoughtful because we do have situations where we've seen algorithms unintentionally be biased to certain taxpayers that have a specific characteristic. So for example, I was reading just the other day about how an algorithm was unfairly targeting immigrants within a certain country because they had a certain characteristic. So I think we need to be thoughtful about that. But I think at its core, it absolutely can play the role of leveling the playing field, so to speak.
Yeah, I think building on that, I think the leveling question is important. And from our end, digitization has to be done in a responsible way. And we call it responsible digitization. It's only when you adopt responsible principles for digitization of mainly financial services, I can speak with confidence on that. That's where we can talk about leveling the access, getting everyone have access to the tools that are critical for them to be able to transact or to live and do whatever they want to do in the economy. So I think it's important to ensure that there is that angle of responsibility. I don't want to add on to what Janai said. The question around mandating, I think, again, that's something that is debatable in that there is a risk of leaving others behind if you mandate without addressing the critical components that has to be addressed. When you talk of a DPI, which comes again to the question that was asked earlier on around trust, which, according to our thinking, trust is really the underlying thing across all the three pillars of DPI, whether it's ID, data exchange, and payments. Without trust, none of those things will work effectively. And so the moment you start mandating something, it means there's something wrong, in my view, with that solution. Why should it be mandated when it's actually going to contribute or when people see value out of it? So the starting point should be creating value and develop a clear value proposition for that solution to make it usable to whoever wants to use it. We've seen cases in some countries. I'll give an example. I hope the Ethiopians here, they are familiar with this example where the government mandated payments of fuel in Addis. Purchase of fuel, every purchase of fuel was made mandatory that it's no longer going to be cash. You have to use digital means. And what that means is that it's creating a lot of pressure on the supply side because the banks were not ready for that. And what it also ended up doing is to concentrate and select a few banks who were ready to run with it and excluded other players in the whole system. In the process, you're already creating injustice and inequality, but at the same time, it also pushed everyone to have an account with the particular banks that are facilitating payments at the fuel station. So mandating works sometimes, but I think it has to be, we have to go back to the drawing board to start to think about what is the value proposition? Why are we mandating some of these solutions when they should be willingly be adopted by people if they're actually going to be adding value? But I understand from a tax administrator's perspective, sometimes you have to mandate because people don't want to pay tax. But even when you mandate, make sure that the system is user-friendly, the system is designed based on the responsible principles that then allows other people to also participate in there.
Thank you for that. Yeah, go for
Yes.
it.
Thanks again for the questions, Fabrizio and Dr. Combat. So in terms of the question that Fabrizio asked, I think it's a good one for us as an example of that forcing things versus working with the client. At the time, for those that know us, we were called Eswatini Revenue Authority before we became the Revenue Service. But that was not just in words, it was in actions. So at that time, when we introduced first e-filing, like Fabrizio said, and then compulsory no cash for tax payment, the first thing we did, we did introduce it as flexible with a bit of education. I'm saying a bit because, again, the approach was not that strong. And it went on for some time as optional. But as we went on, we discovered there was no take-up. And also, sometimes we found it has nothing to do with technology or anything. You talk to someone and tells you, I'm not going to do it, I want you to come and help me with the paper, or I'll come and bring the paper. You can see, just to answer in part Alex's question, sometimes people just don't want to change. They just want to be where they are, and sometimes the reasons are not as clear. So that's why we then moved to our authority, using our power to say now everyone must file online and everyone must use electronic transmissions for payment. So we didn't accept cash in whatever form because it was expensive for us to handle cash, but also it helped us to track transactions by making them go digital. And first, it was a challenge for the smaller taxpayers. Compliance really did go down at first for the smaller ones, but the big ones, it actually went up immediately. And then with the payments, also the timely payment increased when we started forcing things to digital. And then because of the smaller ones, we started using more the mobile devices to do payment. And that helped us a lot to bring more coverage. And over the long term, eventually they all caught up. But what the lessons we learned would never repeat again, the forcing things. We would rather walk with them because it tends not to work if we go for that approach. And then also it was never an option for us because we wanted to revolutionize the administration, automate refunds, automate assessments. Instead of having a tax officer assessing, wanted the computer to do it. Hence, there's no option of going manual, hence why we had to force everyone to go there. And then to directly go to Dr. Combat, hindrances to digitalization. Yes, I've mentioned earlier that it is the people side and collaboration. And first, with that, it's not always a success, especially if it's not a whole of government approach. Ministries and organizations hold their territories and they want to know what's in it for them. There's a lot of pushback and territories. Everyone is covering their territory. What do you want to do with this data? Why are you doing it this way? So it becomes a bit difficult, even though you do that collaboration. But also we found the issues of infrastructure. Most of the time, maybe the revenue administration is more advanced than integrating and working with everyone is a bit difficult. So you do want to digitalize, but the infrastructure is not supporting you. The population, in terms of digital dexterity and knowledge, they are also behind. That also limits to the speed at which you can do this digitalization. And of course, he talked about cash. Sometimes people don't want to go out of cash for the reasons he mentioned, and that's very prevalent. People just want to stay at cash for the reasons that they have, and therefore it also limits that. Otherwise, you will and will always have resistance when you're trying to introduce changes, and it's the communication that helps. Thank you.
Thank you so much for those responses. Very, very comprehensive. We'll take a final round of questions before I give the panelists an opportunity to give me their last remarks and takeaways. So we'll take a final set of questions if there are any in the room.
Yeah, thanks very much for the interesting discussions. I don't know if we are to talk about a blame game here. It seems the blame game about non-inclusion in digitalization of revenue administration seems to rest with revenue administrations. I take the case of the small taxpayers. When we want to introduce some reforms, say for instance the electronic fiscal invoices, you reduce the threshold to ensure they also get included, but yet they don't want to be included, even though it's even an indirect tax, when in fact they are not even the burden to pay the tax rests on the consumer, not the small businesses, but yet they still don't want to accept them. So I don't know how we can get these guys to be interested also in the inclusion agenda, rather than just putting the blame on tax administrations as not making much effort including them. Thank you.
Thank you.
So, thanks a lot for a really interesting panel. I wanted to go back to something that Oswald said before. And you said that you can have inclusion for tax purposes or for development purposes. And I was going to ask you to elaborate a bit more on that. So you said before that you can have inclusion for development purposes or for tax purposes. And your organization in particular is obviously focused on the development side. And for tax authorities, as Edward said before, it is mostly about tax compliance and revenue mobilization. So I wanted to ask you if you see those two things necessarily in contrast, or if they can perhaps even work together, and maybe it can even perhaps be a win-win situation. I'm hoping that Edward's example of moving from an authority to service, maybe it is actually possible to reach both objectives if one runs in parallel with digitization and improvements in tax administration. But I'd like to hear your views on that.
Okay, I don't see any more hands unless, all right, so I think we have those two final questions. I think Oswald, one was directed specifically to you, and I hope I'm understanding the first one correctly, which is a question around taxpayer disinterest or resistance to technology in spite of the revenue administration's best intentions and best efforts. So is it that we are wrongly focusing this conversation on the revenue administration, and we should talk more about the actual taxpayers themselves? I don't know if both Chennai and Edward will have remarks on that. And as you respond, Oswald, you can also give us your concluding remarks, and then we'll go to Chennai, who will give us her response and concluding remarks, and then Edward, and then we'll wrap up. Thank you.
All right, thanks. And thanks for that question. I think it's a... I deliberately say that because what we've seen, for example, in some of the countries is where development or technology, I'll talk of mobile money, for example, which is, if I borrow what the State Minister of Finance said here in Rwanda, he said, we view mobile money as a developmental tool. But if I look at some other countries, they look at it as a cash cow. And from a tax perspective, they think that's the route that we should take to ensure that the informal sector is included in the tax bracket by taxing electronic transactions, for example. And the moment you take that approach, it's no longer a developmental tool. You're looking at it as just a cash cow where you want to make sure that you get all the money into the system. So that's the angle that I was coming from. To say, we view digitization of financial services and payments and inclusion from a developmental perspective, where mobile money should actually be a catalyst to inclusion, or it is a catalyst to inclusion, as we are seeing in many countries. It is also catalyzing a lot of economics around it, because there's so much economics around the mobile money or the phone itself, and you can do a lot of stuff out of it. I don't want to talk much about that because we already know it. But we have a problem when we start to see things like e-levy, like in Ghana. I know we have Ghana people here. There's e-levy that has been very much controversial. And it actually took us a few steps back from what has been achieved. And with that, it takes away the trust in digital issues. It takes away all the thinking and the behavioral change that we've always worked towards to ensure that people feel that they can use it for whatever they want to do. But the moment you start taxing it, understandably, it was more on P2P, person-to-person transactions, and not merchant payments, where they were ensuring that if you don't tax merchant payments, then maybe they'll capture, people will still be able to pay digitally. But the question you ask again, going backwards, is, but how do I put money in that wallet? If I'm going to transfer money from my bank to the wallet, and if that transaction is taxed, then I would rather withdraw my money and keep it cash and go and pay cash. So from that perspective, you're already defeating the goal, the developmental goal that we're looking at. So that's the angle that I was looking at. But in my concluding remarks, I think the core for us from a policy development, strategy development, regulatory development, especially if they are policymakers, I know the majority of us are tax administrators, but for policymakers, I think we need to adopt responsible approaches. Digital, for the sake of digitization, can actually have negative consequences and negative effects, and it can increase the divide. But it is important to adopt principles like the recommendation that came from Caroline. We have developed what we call the UN Principles for Responsible Digitization of Payments. You can go on our website or you can Google that. You'll be able to read more on that. There are 9 principles. We are building the 10th one now around AI, which is meant to guide responsible approaches, which can be used even by revenue authorities or revenue services, right? Not authorities, services, if you want to then ensure that many people are included in the formal system. That also helps to build trust if you go through those 9 principles of using digital. Digital is great, but it has to be done in a responsible way. That's my conclusion.
Thank you. Chennai?
I think I had one question. So I completely agree that often there's significant pushback on the part of taxpayers, right, to be included for different reasons. However, I do think that the responsibility still lies, and I'm not going to say just the Revenue Authority, because I'm going to draw from what Edward said. I think it lies with the government, because I think the responsibility of building trust is something that requires the participation of various ministries for a whole host of different reasons. Because you'll find, for example, citizens will say, I don't want to pay tax because of, for example, I don't see my services being given to me, whatever it is that they're expecting. That falls outside, right, the provision of what the Revenue Authority provides, right? And so I think the responsibility of incentivizing taxpayers, of building trust, really does lie with the government, so that taxpayers themselves then see the reason or the need to essentially become part of the tax system. I think for me, with regards to my final words here, I think when we think about technology, there's often a lot of excitement, I think, that accompanies it. But I think my final words here would be, it's important to make sure that even as we do so, we are putting in place various systems, etc., with particularly the most marginalized in mind, because that's the only way that will ensure that what we're using technology for benefits all and not just a few.
Thank you, Chennai. Edward, final statement.
Yes, my final statement first, thank you for having me here, and thank you, Twive, for leading us well, and my co-panelists here. I've learned a lot already, but in terms of my contributions, I will say we have technology, but of course it's not the silver bullet. It's not the solution to everything. We still need the human being, especially on the service side. And even on the enforcement side, you have EBM, but you still need human beings to make sure those systems actually work well. And then, words I've said already, let's design solutions for instead of solutions to. And we must design solutions with instead of designing solutions on our own. And let's maybe to start trying to think about how we switch to consider taxpayers as clients, just like the way retailers will have recommendation systems online and know our clients, so that we build solutions that are exactly tailored for them. And of course, these design issues that we bring in should really be looking at how do we ease things, enable voluntary compliance, improve that efficiency and transparency, and of course, ensure that equity and inclusivity in our design. And lastly, definitely we cannot run away from investing in the public infrastructure that will enable these things and equity and access that you have received, we have talked about today. Thank you very much.
Thank you. I'll end with my own final takeaway, and I think it came from Oswald when he said we should focus on including people for development and not necessarily for the sole purpose of taxing them. I thought that was a great summary of what this panel was hoping to achieve. So thank you so much to my panelists and to the audience, and yeah, thank you. I'll hand back to the MC.
Thank you so much to our moderator and our brilliant panelists. So indeed, we should be sweeping through hard-to-reach corners, or often forgotten corners is what I would call them, such as the impact of inclusivity strategies on our current gaps, and how best we can tailor holistic solutions by especially being client-centric. I really loved how the conversation went in this last session. So we are going into our next session, which is going to take about a whole 1 hour. This is our research posters sessions. I think I already spoke to you about them. If we can have the representatives of the different posters, please, stand next to the poster so that our delegates can be able to come and engage with you, especially the ones who have already thought of which posters are most interesting to them. You're welcome to, so we're about to have, oh, by the way, you are welcome to take your coffee and come back inside with it while we have those conversations. Yeah, enjoy the coffee break. Thank you so much. It's called Digital Public Infrastructure, or Potential for Tax Administration. It's going to embark on a policy-oriented discussion on the expected benefits of DPI, building blocks. Those are IDs, payments, data exchange for a better tax administration, keeping in mind the previous conversations that we had already. So in other words, you know, where the gaps are also with DPI. Given the rapid advancements of digital public infrastructure worldwide, this discussion will elaborate on how to embed the DPI approach into current digital reforms in tax administrations in Africa, and how feasible the DPI promises are in the practical context of African tax administrations. Our panel is made up of James Stewart, partner and CTO from Public Digital, Nare Niomugabo, who's the Chief Technology Officer from R-Switch, Mary Bain, who is the Tax Programs Director at ATAF, and Israel Bime, who is the CEO of Irembo. Our moderator, I'm looking forward to hear your discussions and how you moderate this, Mr. Vishal Gujadur, since I've just spoken to you a few minutes ago, who is the Deputy Director of the Development Policy and Finance from the Bill and Melinda Gates Foundation. Welcome, ladies and gentlemen.
Great. Hello. So first of all, I'm really excited for this panel because now we don't just have tax people, we also have technologists on board. You can tell who's a technologist by who's not wearing a tie. And they're wearing sneakers as well, so very innovative. But we're here to talk digital public infrastructure, which has been getting increasing mentions throughout the day. And I think it's great that this is coming off on the back of the last panel discussion we had. Caroline and Edward and Chennai all mentioned it. And we often think when it comes to infrastructure as something that is sort of physical, right? We think about airports and roads, things that are needed for society to function effectively. But in an increasingly digital world, we're really looking at, you need digital public infrastructure. And we're hearing that increasingly throughout the day. And as a tax administration, in terms of the audience here, I think we're really wondering, are we actually really making full use of the building blocks that are now out there? There have been rapid developments, as you all know, from digital IDs, especially on the payment side, in the last 10 years. And we're wondering, are tax administrations, have they done the same? And what do they need to do to sort of catch up and make full use of the digital public infrastructure that is out there? So with this session, we're going to talk about those building blocks. We're going to have two rounds of questions. The first is going to cover where we are today, how far along we are in the digital public infrastructure journey, especially when it comes to tax administration with some of the people on the panel. And then we'll talk in the next one about how we can accelerate usage of digital public infrastructure for tax purposes. And then we'll save that for about 20 minutes of questions at the end of it. So very much looking forward to it. So I'm going to first start because I think that we started very briefly. I think Caroline had a brief flash of what digital public infrastructure was in her overview, but I thought what we'd actually do here is have James Stewart, who is the Chief Technology Officer of Public Digital, a consultancy firm, and he also runs their global impact business. They have clients including governments, nonprofits, the World Bank, and IMF. He was also previously the Deputy CTO at UK.gov and was also in part of their digital government service where he built gov.uk. So with that, James, can you give us a bit of an overview of the core DPI concepts for the people in the room, particularly as it relates to tax, and where you think not just sort of where countries are in the world in implementation?
Sure. Yeah. First, thank you so much for having me. It's been a privilege to be here today, and lots of really rich themes through the day that hopefully we're going to pick up in this panel. I think to set a little bit of context before those sort of core DPI pieces, I think as I think about this, I think sort of digital and digitalization isn't a new phenomenon. And I'm working with one tax authority that has technology dating back 50 years. They've been bringing their data and their processes into computers for a long time. But typically that's been kind of taking what they do today, putting it on a computer, and doing that through very large technology programs that aren't connected to any other kind of reform that they're doing. And we've seen that pattern kind of repeated globally and within most governments. So we've heard references today to the kind of siloed nature of how people have tended to build technology to solve specific problems. And the fact that then we layer in a lot of complexity when we want to exchange data between different parts of government, when we want to change processes. And that's complexity within a government, and it's complexity for citizens or other users of our services, who we ask to give us the same information more than once. We put them through painful processes. And we do that in a really expensive way for everybody concerned. And while we've been doing that in large organizations, particularly in governments, the world around us has moved on. And we've seen kind of rapid shift in the needs that people have of how technology serves them, the expectations of how that might happen, and a growing kind of development from the private sector of providing kind of building blocks for our societies. And in that context, there's been a response saying, We actually need to shift this approach. We need governments to be able to deliver for their societies more effectively in a digital age. And we need to make sure that the core building blocks that we have are governed in a way that ensures public value. And that's where sort of this DPI concept has come from. And it kind of takes two forms. And one is an approach, as was alluded to in the introduction, which looks at how can we break down the big problems that we're trying to solve into small building blocks that can be developed and used quickly, but also create greater value than they seem because they can be reused and repurposed over time. And then three that have really come through, so that's where we get the concepts around identity, making it simple and consistent for people to verify who they are when they're using services. Payments, digital payments, making it much simpler and again consistent and ideally cheap to pay for the services that you need or to receive money. And data exchange mechanisms that don't require us to kind of ship large amounts of data back and forth, create lots of complex memorandums of understanding every time we want to do something different, but instead allow us to kind of verify data that different entities hold about a person in a way that builds trust, that is verified and secure. The first two of those, I feel like I see a lot in tax administration. You just have to look at the boards around the back of this room to see some really rich examples of where tax administrations are definitely diving into this identity space and improving their data and access to their services through harnessing identity. We'll hear more about that tomorrow. Digital payments, the picture's a little bit more mixed, but there's a lot of engagement there, and the value proposition for tax administrations is clear, that you can make paying your tax easier, what's not to like. The data exchange piece, I think we're very much at the start of that journey, but I think it's one that we really want to focus on because it's probably where we can do most to address the trust issues that have come out through today and the value proposition. And personally, I'd love to see more work on how can tax administrations not just absorb and consume data, but also create services that build on the data that they've got to kind of streamline other parts of people's lives. Happy to talk about that more, but conscious we need to keep moving.
Well, great. So the way we're going to be most efficient by covering things is by to our next participant, who a lot of you will know, is Mary Bain, the Deputy Executive Secretary of ATAF, the African Tax Administration Forum. She is also a former Commissioner General of the Rwandan Revenue Authority. So she has insight to cross-country experience, all around. So I'd love for you to give us a bird's eye view, Mary, on where you think we are in terms on the continent of people using digital public infrastructure for tax administration.
Thank you so much, Vishal. And since I'm speaking for the first time, I want to start by thanking the ICTD for the kind invitation to me to speak at this conference. I have, in particular, learned a lot today because everything that was mentioned earlier in terms of how digitization can support tax administration, I think is really long overdue. When you look at the global landscape, I think the digitization is now really like occupying prime space in everything, especially for the tax world. And coming closer to home on the continent, like I was speaking to Vishal earlier, I think the level of digitization is similar to the level of economic development of most countries. So we have countries that have implemented most of what was being spoken about earlier. And I'll give an example, say, of South Africa. I work with colleagues who don't even have to go to SARS to go and declare their taxes because everything is pre-populated, everything is digitized. But I also know another country in the southern region that I'll not mention where they're still doing physical filing. I mean, you would think that in 2024, there's no country doing that, especially if you come from a country like Rwanda, like myself, where even my mother, who is 88, uses mobile money. So I think in reality, what we need to discuss and what I got today is that if you look at the next 10 years, and if you look at the demographics of this continent, I think digitization is the way to go. And using the digital public infrastructure, I think, is something that is critical to taxation. And I'll say it in just 3 points. The first being that, like an earlier speaker said, information is power, and information is everything. to taxation. You cannot tax what you do not know. And one way of solving one of the issues that is really, really critical in this continent, which is the informality in the tax world, is digitization. And so when I was listening to the different elements of government, I think one way of resolving this is having an all-of-government approach that would then feed into a system that would enable the tax administration to collect tax. And I want to sort of disagree with my brother who talked about taxing, taxing to get funding as opposed to taxing for development. I can't remember exactly how he phrased it. I thought actually both of them lead to the same thing, because the taxes that are collected also lead to development. And so maybe it's, you just have to look at it from a different angle. So for me, I think digital public infrastructure is critical to taxation because, one, it will enable the tax administration to get the information that they need to do the proper risk analysis. And two, even as we try to take it to another level, to tax at the global level, it is, if you can't manage information at a national level, it is very, very unlikely that you'll manage information that you get, from other countries or other jurisdictions. And so even as we were talking about, I think there's an earlier speaker who spoke about exchange of information, automatic exchange of information. That is ideal. That is what all of us want to get to. But if you cannot even exchange information at the national level, which is really something that is happening. I'll give you an example, again, this time from the East African region, where we were trying to provide advice to a country on whether to introduce a digital services tax. And one way of doing that was to look at the banking data. And it took the government a couple of months for them to convince banks to give us that data. So I think this digital public infrastructure would actually come in handy where those policy requirements are in place. The second thing is to have an environment that really supports this process. And I think that is what has been really absent. So I was really, really happy to hear this morning some of the strides that have been made by the countries. And the third, of course, is the willingness of the politicians. So if there's no political will, this is not going to work. And for me, I think this is somewhere where, different institutions, including ours, can come in to try and see how to garner this, so that at the policy level, we are able to invest meaningfully in this digitization. Thank you.
Great. Well, thank you. And that actually is great, because I also think that brings me to one of the things that also came up was sort of the question of mandates versus incentives to use sort of newer technology, especially for taxpayers. And so our next panelist, I think, has a lot of experience with this from the payment side. So that's Nhare Niyomugabo. He's a technologist at the forefront of digital payments, 14 years in Africa and the Middle East, including most recently spearheading eCash, which probably some of you have used here in Rwanda. So Nhare, can you tell us a bit more about Rwanda's digital payments journey and how you sort of encouraged adoption and sort of how that sort of happened over time when it wasn't sort of one big bang, but a sort of a steady process of getting people to sort of accept and use in terms of use cases?
Yeah, thanks, Vishal. And again, thanks for inviting me. It's a big privilege to be here. Yeah, I think digital infrastructure, like any other infrastructure, it links a person to another, it links a country to another, where someone can pay, someone in US can pay in Rwanda in another side of the world. But coming to Rwanda, especially, we basically had a big increase in digital payment during the COVID pandemic. And in that period, you could see that the payment, digital payment, basically, it's done in closed loop, where you'll find a payer and payee basically sits in one institution. So getting data from such setup for taxpayer, for tax administration, for tax authority was not that easy. So what we did as R-Switch with support of National Bank of Rwanda, we came up with a product called eCash, which is basically a public digital infrastructure, which is a payment hub which sits between all payment service providers in Rwanda. Each and everyone connects on the same, instead of having a payer and pay sitting in one payment service provider or one institution. Basically, we facilitate the interoperability between all these payment service providers around. So what it helps now to tax authority, Rwanda Revenue Authority today, if they want to collect funds, they need, using digital, they need to have that integration with, let's say, one mobile operator. They have to connect with the banks. They have to connect with multiple bilateral connectivity with the payment service providers. But in the case of eCash, which is the instant payment, Rwanda Revenue Authority will have just to connect with the eCash, which is the instant payment hub, and be able to collect from each and every payment service operator in Rwanda. So in tax collection itself, it will facilitate the tax collection, but two, whenever they want data, with one single API, they will be able to fetch and get data for if they want to make any decision around it, if they want to collect data from any merchant or any business company, they will be able to get data from a central point. Another point here, it's not only eCash will be facilitating the data collection, the payment collection or tax collection. The fact that even merchants will be able to collect, to get paid through digitally paid, even the part of I could call it transparency. Rwanda Revenue will be able to get correct data from central point. So yeah, I think digital payments today, as other panelists said, it is the way to go to basically facilitate the tax administration part. Thanks.
Great, and so that actually brings me to our next panelist, and because I think that, as James mentioned, data exchange is the area that's probably been least developed right now. You have payments, you have IDs, and it's bringing those together in a way that makes sense and can be used by people. This is where the real magic happens. I used Rembo when I came over here for my visa. I'm sure some of you probably did as well. Israel Bimpe next is the CEO of Irembo, a Rwandan software group developing platforms to help government and companies manage services. It's a one-stop platform and was previously at Zipline. Given that you've been working at this and you have been successful at bringing together IDs and payments and services for citizens, and you've been working with Rwandan Revenue Authority, I think, for 10 years now, can you tell us a little bit about how that's been? What did you find helpful to sort of really build off of the rails that have been built already?
Thank you. Thank you so much. I appreciate the invitation to be here. For the past 10 years, we've been partnering with the Rwanda Revenue Authority and other government institutions to try and deliver a seamless experience to access government services. It really started more as a dream and kind of what we touched upon. First of all, we start with the payment rails, then we start with IDs. But for Irembo, we don't stop just at IDs. I think the next layer of digitization, it's IDs and several registries. You have a registry for land, you have a registry for buildings, you have a registry for vehicles, you have a registry for so many things. and usually that end up coming into the tax space as well. And then on top of that, we now build a service layer to be able to interact with citizens. And the dream was really, how do we make government feel as one for every citizen, for every business, for every investor, so that when you're interacting with a government institution, you actually kind of don't even know which institution it is that you're interacting with. When the experience is happening across different institutions, it's just seamless across the board. When we started doing so, what we realized is what matters even more, it's the back end, how we collect the money, how the money comes from the citizen, all the way into a particular institution that's providing the service. It happens to be that over 75% of the institutions we serve actually don't even collect their own money. It's collected through the non-fiscal revenue approach, where most of the money goes directly into the Treasury, and Rwanda Revenue Authority is the partner that does that for us. And what they needed to be able to see is kind of data visibility, track and tracing of every payment, and really understanding what's happening across the board. With non-fiscal revenue, that's also where corruption happens. When you're applying for a passport, a birth certificate, when you have to cut the queue, when you kind of receive so many people in your office, that's where inefficiencies happen, that's where corruption happens, that's where development fails in many ways. And what we try to do is, how do we build the system, the software, and the service to be able to solve for, on one hand for the citizen, the consumer, on the experience side, but on the back end for the government official, for the tax administrator, and for government as a whole to kind of have that clarity, visibility, efficiency of what it is that's happening. And so that's kind of how we've approached it, and that's what we've gone about it. Over the past 10 years, I think we've evolved into so many forms of work. It operates as a public-private partnership today. The idea is also we had to build the best possible technology that's out there, because for citizens, for businesses, for the talent to be able to build this, you have to really operate in the same space. And we tried to go away from the approach of a big procurement of a monolithic system that will never evolve. And usually you have a monthly or annual fee of maintenance, and it's a transactional relationship, while we wanted to be able to have a continuous improvement approach to what it is that we do. Government services evolve, government itself evolves. In Rwanda, we have about 40 institutions that we serve. We have about 10 of them that are new. And those institutions have never provided services in a manual format. I think they were created after Irembo and have just started providing services digitally. And so that kind of allows us to be able to revolutionize pretty much how we think about providing services, but much more importantly for tax administrators, how do we have much more visibility in an area that was otherwise very hidden, which is the non-fiscal revenue space. And now the next step is understanding what's really happening, what kind of services, what efficiencies are we gaining, and how do we continuously improve. What has happened in the past, we've not just provided significant efficiencies gains, but also some services ended up being zero-rated because it's now digital. It's happening very well. So the government does what it does best, which is providing a great service to citizens without also burdening citizens with high fees. This year, for example, we zero-rated the land transaction services, where it used to cost the equivalent of about $25 or so, to introduce more of a tax on the value of the transaction above a certain threshold. And it significantly reduces the burden on citizens, because it was said that that fee was because you had the land paper to be printed, but all of those are now digitized. And we try to do that across a broad set of services. And where the fee has to be there, it has to make sense, and so on and so forth. So I think that's a bit what I could say. Irembo, maybe to give you a few stats, we have about 40 partner institutions, 230 services. As so far, year to date, we've done over 8.5 million transactions on a daily basis on average. We collect on behalf of the government the equivalent of $300,000 US digitally, and essentially what the government gets is really the money, but the citizen or the user has easiness of payments, as you mentioned, you paid your visa. If you are from the US, you can use Amex. If you are from other parts of the world, you can use whatever is easy for you. So as a citizen, as a consumer, you have the best possible experience engaging with government, while on our end, on the government side, it's much more visibility and a better approach to providing services, all the while improving the efficiencies on a revenue basis as well.
When you were talking about the services and the information that you have from land registries to everything, I'm sure that there are a lot of people in this room who thought, really? So you do? And I think that's just sort of a great example, too. I mean, I saw the ITAS poster back there as well. The question is, like, what are we going to need to do differently to really take advantage of digital public infrastructure? And it won't be the same things that we've been doing for the last 30, 40 years. So that'll be the next round of questions, which is really on something forward-looking for people in the room, what they should do when they go back, what they should be thinking about, how to put into practice, what sort of research questions, what sort of ideas should they be pushing across in their own revenue administrations. James, let's start with you there. What do you think would need to really make use or accelerate sort of DPI for tax administration challenges and data exchange in particular?
I think one of the challenges when we're talking about DPI is it can sound so huge. Like we're taking on this massive transformation. And it does require a certain amount of boldness to think in a different way, approach problems differently from the way we've all been incentivized to do that in the past. So there's something about kind of thinking big and being bold and really seeking out where can you build kind of horizontal trusted relationships. I really like the kind of thinking as the whole of government, because so little of this is achievable. If you're just in one part of government, you need to be thinking horizontally. But at the same time, there are opportunities to start small and to think about where is the one problem that we're facing, where we can think about how can we break that problem into some smaller pieces? How can we think about let's think about how we manage this small piece of data in a different way, build the first register that we need of some data that can be used by us and by somebody else. And picking off those small pieces to start with and then learning from that, and then finding the next piece, testing an approach, learning over and over again, is the way that most people who get good at anything get good at it. And that's where I think it's really important to bring the be bold, think differently, but then find a place to start small and test and learn. And I think that's as true in revenue ministries as anywhere. And I think revenue ministries are really, and authorities and agencies and services are very much at the kind of the sharp end of a lot of the trust issues that are being faced, and so perhaps have some of the strongest incentives to dive into how do we pick off some small pieces where we can demonstrate some improvement that builds trust. How do we work with another part of government to do that?
Great. And I think trust, of course, is one of those things that's been coming up a lot over here, and digital can, I think, sort of foster that trust, but it needs to be done in a stepwise process. Hari, maybe we'll go to you next for that. Based on your experience, what do you think will help accelerate the use of DPI for people in the room?
So thanks, Vishal. So I think the thing which can accelerate the use of digital, it's the affordability part. I'll give you an example of our case at least. In the period of COVID pandemic, central bank put a mandate to zeroize the transaction fees, at least when you are sending money to yourself. You are debiting your account, crediting your wallet account, it's totally zero. Now, when you go to a store to do a merchant payment, to pay for goods and service, for at least the consumer part, it's totally zero as well from on consumer part. Then it's for merchant now to pay the interchange part. So with that mandate to zeroize the transaction fees, you could see that a digital transaction, we had an increase of digital transaction all over the country. So another part is the inclusivity part. So whenever you have an affordable service transaction which are affordable enough, people tends to embrace the digitalization. The third part, I'd say the trust. So people out there are still has that fear of unknown. Think that whenever you are using, whenever you digitize your money, you basically expose it to cyber attack. So that is where now the awareness need to come in, but awareness followed by the, as technologists, have robust technology to make sure that we protect the, that digital money, to make sure that the user, end users, has that trust in digital transaction, be it in payment or even in data, make sure their data as well cannot be accessed by any malicious person. So yeah, I think those are three things which I think can support in pushing ahead the digitalization path.
Well, great. So Israel, maybe to you next. What next for IREMBO, particularly on the revenue side? You could come to the US, by the way, because the US really needs it also on the but what next for you?
We'd be happy to, and we've been tracking that. I think for us, what we are thinking about is, first of all, we have an idea of what does digitization look like for a Rwandan citizen. I think today we still ask, I think Mary mentioned it, we still ask people to file, to submit, to apply. We have to move away from that as we integrate data systems, as we integrate different institutions. It has to be quite seamless. We always gauge ourselves at IREMBO by whether we are the first stop for the citizen or whether we are the last stop, or what are they really trying to achieve when you come and apply for a government service? Are you on your way towards something else? Do you want your marriage certificate because you want to get a loan? That's government, private sector. Do you want your birth certificate because you want a passport? How do we get you to the last point fast enough? And everyone who has to be involved are involved in the back end. That's number one. Number two is, how do we think even ahead of time? Because we have clean data of everyone. We know when a baby is born, why don't we just gift them with their ID card, with their passport, with their health card? Why do we need them to fill any form? Are we suspecting a 0-year-old of anything to cross-check? Not really. And so on and so forth. So we think across the life journey of a citizen, of a business, of an investor, what it is that they are going to need that we should anticipate. When we are registering your business in Rwanda, we probably know that you will need a visa for your staff. If you are registering that the owner or the legal representative happens to be a foreigner, can we automatically file your visa applications, and so on and so forth? So that's really the digital transformation aspect. Continentally is also thinking ahead, because the continent is going to be one in many ways. The Free Continental Trade Area is going to allow us to trade together, and that means we have to think bigger and what it is that will that look like, and what does technology do in such a space. But we now have to start small, as James mentioned, of what it is that the right building blocks will be towards that. But we don't have to lose the big picture or the dream of what it is that we are trying to achieve in many ways. I think that's what it is that we look at and how we think about it. How to think about it if you want to do it in other places, I think for us is the power of public-private partnerships. IREMBO was established by government as a private company so that we can gain a lot from the talent base and from fast digitization and so on. But not doing everything in-house by certain partners and sort of figuring out how to work with people who are much better at it is going to be quite interesting and important to think about. It allows for scalability, it allows for adapting to consumer trends, it allows to adapt to changes that are happening in the ecosystem, and so on. For a country like Rwanda that's developing, it's a lot that changes on a year-to-year basis. And so I think that's what I would say, and I think there is a tremendous amount of opportunities to try and discover and how we can really evolve, and we don't have to, in Rwanda there is this idea that government is always better than the private sector at providing services and such experiences. So how do we continue to hold up to that standard? Applying for your passport is much easier than applying for your loan or getting health insurance. And we want to stay at that level and sort of driving the agenda in that way. So thank you.
Great. And so, Mary, I wanted to end with you before we turn it over to the audience for some questions as well. But given that ATAF is actually one of your 3 priorities is actually on the digital side, what do you think needs to happen across the continent for your members to accelerate DPI use in tax administration?
Thank you very much, Vishal. I think listening even to just this panel, I think a lot needs to happen on the continent. But I think the first thing that needs to happen is for us not just to embrace this at just the country levels, but even at the continental level. Because at the continental level, there's now a platform where we can discuss these tax issues. And if we are saying that the digital public infrastructure concept is as critical as we all believe in this room, then I think it needs to be a discussion at the continental level. And so even as everybody was talking, I was saying, as we contribute to the agenda at the AU level, shouldn't this be a discussion, maybe, of the subcommittee on tax and illicit financial flows? Because the information that was talked about here, the evidence that is available through all that data that is collected, can then be used to develop legislation. It can be used to advocate to governments to take intentional decisions to invest in this kind of digital public infrastructure. I think it's something that has to be done consciously. Listening to Israel, I was thinking and I was trying to imagine the kind of data I would extract, say, from the connection. When he talked about I want to check my notes very quickly. He talked about services, but he also did talk about the fact that they've digitized registries. Imagine having the access to the registry of, say, the National Procurement Authority. You'd be able to get beneficial ownership data that you do not have for taxation purposes. You'd be able to get real-time data on what is going on in terms of the business world that is trading with government. And all that is really critical to government. So for me, I think this discussion should really go to the subcommittee on tax and illicit financial flows at the level of the African Union, because that would then feed into the subcommittee of the ministers, rather to the committee of the ministers, the specialized committee of the ministers, and later to the heads of state, so that they can understand that digitization of these systems is no longer an option. It is something they just have to invest in. So for me, I think that's one. Number 2, we are all gearing up for the Funding for Development conference next year. We all agree here that it's really, really capital intense to digitize. So if that is happening, are we including it in our proposals? Because that is the discussion that is going to be happening in Spain next year. So for me, I think that is a second issue. And then the third is what we called responsible digitization. So if that is the case, I think even as governments, we need to start thinking, how do we manage the change? If we're embracing the change, how are we going to manage it? So for me, I think those 3 are critical. Thanks, Richard.
Well, great. Well, thank you very much. So now we'd love to hear from the audience. So we have hopefully time for 2 rounds of questions. So we'll take 3 first and we'll put them to the panelists. And yes, please do raise your hand and people are making their way around with microphones.
Thank you. So I would like to ask a question, especially concerning the e-cash. But also the other question, we go to the payment gateway. So when we see where the government is heading, of course, we see that there is much effort which has been put into enabling the e-payment. So now concerning the e-cash, so is there any possibility where like someone who wants to develop a further system and include the payment as a gateway, is it possible now? So because when I was checking online, I couldn't see like any API which is available for anyone who can go there and just try to develop his own solution based on eCash as a platform. But according to the reading, so it is clear that you mentioned that it enables the individuals and the business to make transactions. So now I want to get an understanding of how individual can now tap in and be able to use that platform. So you can a little bit elaborate about that one, so that it can be clear to us. Now concerning the payment gateway, when you see there are a lot of payment gateways which are available, so is there any way we can have like a common, known or universal payment gateway which can be used and be adopted across the different countries? Or there's such a competition that we need to avoid? So anyway, there's a way we need to find something which is recognized internationally. Because, for example, you would see when you want to collect money from a specific organization from outside, maybe they will force you to use PayPal. And probably here, PayPal is not allowed to collect the money, to receive the money, unless you are paying. So is there any way we can have a universal means of collecting the money from any donors or from any people who are paying? Thank you.
Great. I saw
Hi.
one over there and one over here. Yeah.
Hi, I'm Fabrizio Santoro from the ICTD. I had a question specifically on merchant payments. I'm aware that eCash now it's also offering an option for merchants, right? And I also know that there is this specific payment gateway from Irembo Pay, which also enables merchant payments. I wonder if you can briefly update us on how things are going there. We have done research with the RRA on patterns of adoption of MTN, mobile money-based payments, with lots of challenges there. So I wonder now what's the hope for these new solutions for merchants. Thank you.
Thank you. Thank you for that discussion. Now, my question, we've been able to see from the discussion today that when applying DPIs for payment transactions, there are some incentives that can be put in place. For example, making the processing fees affordable or zero rating the fees. But then when it comes to using the same for tax transactions, especially for data exchange for tax purposes, then I think there may be need for additional incentives. So for the panel, maybe to comment on any other additional incentives that can be put in place so that when we get to that point, we don't end up eroding the gains that have already been made, especially in the progress that we've so far made for DPIs on payment transactions. Thank you.
Great. So we'll start with those three questions. I think that primarily for the technologists, why don't we go down the line that direction, and Mary and James, if you want to comment as well, I think that'll be good too.
Yeah, thanks for the good question. Yeah, so basically eCash plays, I would say, plays in B2B level where it connects with payment service providers. So by payment service providers, I mean the institution which holds funds. So yes, we have an API where a business partner or a participant can connect to eCash and be able to collect funds from anyone or from any end user or from any payer. But again, for you to connect to eCash, you need to be certified by BNR, because any payment service provider needs to be regulated by Central Bank of Rwanda. So, and among the certification or for the today which are allowed, which are regulated by BNR, there is payment service providers, there is aggregators, there is payment initiators. So for your question, as a business person, you might need a aggregator or a payment initiator system, and for that payment initiator system will be the one to connect to eCash. Then you will be able to collect as a business person. I want you to give an example of a utility company here. Let's say utility company or EWASA or WASAC. If, for instance, WASAC is a big biller among the big biller we have in Rwanda, if, for instance, they want to collect, they will need to use or to write on a payment gateway. Then when they are collecting, that payment gateway will be the one to be connected to eCash, then be able to collect their funds through eCash. So what the role eCash plays here, it's eCash has been connected so far with all payment service providers in Rwanda. Here we are talking commercial banks, we are talking MFIs, we are talking SACCOs, and mobile money operators. So as a big biller, using a payment gateway, you will be able to collect from funds from all these banks, as opposed to if, for instance, the eCash was not there, the big biller will have to do integration with each and every payment service providers in Rwanda. In this case, big biller will, through a payment gateway, will open up one connection to eCash and collect to each and every payment service providers in Rwanda, which is one single connection, and you have access to each and every payment service providers in Rwanda. So that is the way, for your question, that is the way you can connect, but any shop can't connect directly because a shop needs a bank, needs somewhere your value will be stored. So yeah, but again, the API is there, but it's for the B2B level. Yeah, so the second question was on Rwanda Revenue Authority, how eCash can be leveraged to support the collection of tax through from Rwanda Revenue side. Yeah, we do have I'll call it a request to pay API. Today, Rwanda Revenue, to collect some tax, they had to connect with mobile money operator. They had to connect with, to name some of banks. So what eCash does again here is, instead of tax authority or Rwanda Revenue Authority knock to each and every payment service provider's doors to do an integration, we've exposed an API, which is a request to pay API, connect to Rwanda Revenue Authority system. Whenever you find yourself in Rwanda Revenue Authority office, you want to pay. If you do after doing your declaration, you will now have to pay by hitting one payment, to hit the pay button. Then Rwanda Revenue System, what it does, it's send that request to pay to eCash, then eCash route that transaction request to your bank. So at this stage, we've done the integration with all banks. The remaining part is to open that connectivity between eCash and Rwanda Revenue System. Then any taxpayer who is sitting in whatever payment service providers, they will be able basically to pay without necessarily requesting Rwanda Revenue to do multiple integration. With the one integration with eCash, each and everyone who at least is financially included will be able to pay tax.
Yeah. Rambo, do you want to take the digital merchant payments question?
Yeah, sure. Thank you. I think to give you context, before a government institution or the tax authority, if they wanted to collect payments, let's say you have to get your passport, the government would put in place a way in which you walk to a Rwanda Revenue Office to pay. They give you a receipt. You go back to the passport office and so on and so forth. So it was primarily cash-driven, and very few kind of would have to do bank transfers and the likes. So since we launched, and to also give context, Irembo Gov is the government service platform. However, it has an embedded payment gateway within the platform, which is Irembo Pay. This year, we've sort of rebranded it to make it a standalone product. And that's kind of, people are starting to see that the payment service that was within the government service platform is sort of standing out on its own. And what it has driven is paying for government services digitally and sort of driving the digitization of the financial ecosystem, where there is we have no cash counter anywhere except at the airport when travelers are coming in and want to pay their visa. And what you'll see now, we are also discouraging receiving cash in hand, encouraging people to pay with their cards or the like, so that there is absolutely no cash point anywhere when we are transacting. As I told you, on a daily basis, we are transacting about $300,000 on behalf of the government that we are collecting from citizens and others. So I think that's how it's working. What we try to do is we give the consumer a wide variety of choices, from mobile money to cards to bank transfer to paying with your bank to paying at your bank, and so on and so forth, and very soon e-cash as well, so that the consumer has the choice of what it is that they want to use. The tax authority or the institution, for them, they just want to see the money. They probably would want the data on how the money made it to them, to understand what are the trends within the ecosystem and inform other policy decision. But primarily, they just want to see the funds in full. Secondly, to see the data attached to it, which is something we try to provide, for what service, from where in the country, and so on and so forth. I can also touch on the question of how do you build incentives for data exchange. In addition to that, I think what we've learned for us is everyone who is holding on to data needs more data. That's the incentive number one. They want to verify the identity of the person who's transacting with them. And we, for you to verify the identity, you'll need to connect with an identity registry. They will want more information that are prerequisites to providing a service or to do anything. So that's incentive number one. You hold on to data, you always need that data. So why don't you, while you ask other people to open up their data, you should open up your data as well. The second is common goals. What it is that we are trying to achieve, whether for the consumer. As I told you, for us, we try to remind the institution that government has to feel as one for the citizen. When you come to the Irembo Gov platform, we don't tell you which institution is giving you the service. We just list the service actually by category of services, not by institutions providing them. Then second, the biggest challenge there is the technical capabilities, really. Most institutions are still running on legacy systems that are very hard to modernize, that don't have components of data sharing, that cannot build API, that cannot consume APIs, that have shaky cybersecurity capabilities. So the idea of how do you modernize legacy systems, or how do you build systems where they don't exist? And the second point attached to that is what we are trying to help institutions do is establish some form of standards of development of ERP systems within institutions. Because what we also see is there is always a procurement element. Some institution will build an internal team depending on how much revenue and revenue sources they have. And usually they won't follow the same standards of development. They won't anticipate data sharing in the future. Our government has tried in the past to have what we call a government service bus, so that there is a mandatory approach to sharing data and opening data within the government ecosystem. That can also be a tool to be used in that sense. And I'm pretty sure whether it's the DPI framework, whether it's other building blocks for government services tend to have guiding principles around that. And lastly, what's really important as well is data privacy and protection. all the data that we hold on to as government institution, it belongs to the citizen, the person who provided data. So they have to have consent. They have to have managing consent of when and how the data is being shared and used. So I think that's compose what we would call the incentive structure. And it's a tedious work to do, but we work with the institution to try and improve the capacity and the quality of data that they hold on to and how they can share it across institution, but also increase that quality approach. So I think that's what I would say. The gentleman spoke about having multiple payment gateways and having one universal. Unfortunately, it's probably not possible. But what we could do is that interoperability, also porting it into the private sector. What eCash is doing is based on an open banking framework. So how do we think about aspects like that we can put in place where there is no barrier to whether the government on how they can receive payments or the consumer how they can transact? Just like how the business will try to not put any barrier if you are doing e-commerce, how does government adopt the same approach and use its regulatory capabilities and power to be able to open up the ecosystem in that sense? I think that's a way to go. Otherwise, it's quite impossible to try and have one universal payment gateway continentally or globally. Thank you.
Yeah, just build on that slightly. When I was in the UK government, we did a similar initiative, I think, to Irembo Pay called gov.uk Pay, where we were trying to move from a situation where we had 200 different contracts across government for taking credit card payments and 200 separate integrations to a single integration into a single platform that still used a lot of market services behind it, but gave us one place to manage change. And that then meant that as we wanted to layer in different payment instruments or shift people to different, more cost-efficient ways of doing payment, we had a lever for doing that and a place to do it. And so while I think that kind of, the goal of a single way of doing payments globally feels a long way out of reach, a strategic platform that lets you much more efficiently tap into the different ways that people want to pay is definitely there. Also, just quickly to build on the really important question about the incentives on data exchange. And I think there are a number of kind of policy instruments that I've seen people use, like setting a once-only principle, which is sort of big in Estonia. Others have tried to copy it, saying if government holds some data about you, it can't legally ask you for that data through another service. It has to sort out its internal workings for that. Those things can work, but they're complicated to make work. But there's another piece which is actually thinking about the new and novel uses of data that build different feedback loops. And so a lot of the time we're sort of dealing with people come to whichever part of government we're talking about quite occasionally and give us some data, and we don't know about the quality of it, we don't know if it decays over time. But if we can start offering new services so that they can make use of that service and our verification of the data, then we create an incentive for them to keep us up to date. And that can start to change the way people think about data. So I think if we think more expansively about the use of our data, we may create new incentives.
I was going to give two examples based on that. In Rwanda, we have what we call at our institution a zero trip, zero paper service index and ask once policy. And essentially the zero trip, zero paper service index is how many institutions ask you to travel or to move around a lot and ask you so many paperwork. And it's kind of a competition between institutions to always rank high by digitizing further and by opening up their data. And the ask once policy is exactly what Estonia has done. Essentially, you shouldn't apply twice with the same document. And this coming year, I think we are enforcing it much more forcefully across all service layers where everyone just has to upload documents once and everyone else just has to consume the same type of documents. And it forces people in one room to really figure out how to go about it in that way.
Well, thank you very much. I think we are just about out of time. So what I'm going to do, I think since the panelists have mostly responded to questions, I'm going to give the final word to Ms. Mary Bain. Anything you want to say to close as we sort of bring, we only had an hour for this session, but there's a lot here. I think that these concepts, by the way, you're going to see them tomorrow in a lot of the panels and in a lot of the conversations that from a lot of you around the room. So it's very exciting. So thank you very much to the panelists. But Mary, why don't you close us?
Thank you so much, Vishal. I think listening to the efficiency gains that come out of the digitization of public, the digital public infrastructure, I think everybody around the room is in agreement that it is really the way to go. But I think the efficiency gains themselves are also an incentive. And I'm in total agreement even with the speaker who said that usually the people who withhold data also want data. And I did give an example earlier about when we were trying to help a country make a policy decision on whether or not to introduce a digital services tax, and the banks were holding on to the data. When we eventually got hold of the data, interrogated the data, and then gave our opinion, the banks were really, really excited about how we had reorganized our data, and they started learning a couple of things that they also needed to apply. So I think that in itself is an incentive. But as we close, as we bring this to a close, I think there is something that is really critical for governments if this is going to work, and if we are all in agreement that it is really critical. I think, one, it is really to make it mandatory for this data exchange to happen. And I think, listening to Israel, I think it has worked because government made it mandatory. You just have to give the data. And therefore, if you're in agreement and put the right governance in place, then making it mandatory does not impose anything on anyone. You just need to produce the data, and it is all used for the common good. The second thing is that I think governments will need to make informed decisions and intentionally invest in this, because it is it is really expensive, but it is very necessary, and it is the future, whether we like it or not. And then last, it is the change management. And I think even the different issues that we had were really about people resisting the change, but eventually when the change was taken on, everybody realized that it was really a more effective way of gaining this. So whether you're looking at it from a point of view of a tax administration and you're collecting revenue, or whether you're looking at it from a development point of view, I think at the end of the day, the digital public infrastructure, once put in place, I think is a win-win for everybody. Thank you.
Well, thank you very much, everyone. Thank you for our panelists, and I'll turn it back to Nancy.
Thank you very much to our moderator. Yes, round of applause, please. What an interesting conversation indeed. The world has become definitely a global village as we began from just the start of this conference, as you mentioned. And it was also mentioned that indeed people do tend to resist change because there's fear of losing their jobs. But then we also remember from the last session, I think it was Edward who mentioned that even as much as we get digitized, we still do need that human contact, because it is humans that have to be operating all these algorithms and so on and so forth. Having grown up in South Africa, actually, I can attest to being able to file your returns just sitting at home. You know, you deal with the SARS stuff because it's already pre-filled. You don't have to deal with so many headaches to get your files, your taxes filed. And yet again, being Rwandan, I can also attest to the fact that the Irembo products, for example, yesterday, I think I was looking for my, I think they call it a certificate for being single. And it took a few minutes, literally. You know, I just filled in what I needed to fill in and paid right from where I was sitting, and then got to my certificate and then continued with the rest of the day. And so it's definitely the way forward, whether we like it or we don't like it. And so it will be good for all of us to be on board and bring this change to the fore. So, as we come to the close of business, I just want to announce that we are going to be hosting a dinner at Hotel de Mille Collines. It's just 15 minutes walk if anyone wants to take the walk. However, there is going to be bus coaches downstairs at the main hotel's entrance. So just beneath us is the conference reception, okay? But then if you walk down the hall, that is the main hotel's reception, and that is where everyone is expected to be meeting. The buses will be leaving at 6:45, so we are expecting people to have arrived at least at 6:30, okay? So, and everyone is welcome to come and join us. How you make it there is up to you, but just remember there are buses that have been provided for you. And thank you so much for such an engaging day. Give yourselves a round of applause. See you at the dinner.